All right, what's going on, guys? Welcome back to the channel. Crypto Trend Trader with a Sunday night market update. All right, just let me know. I got a couple people in here already. Let me know when you're in here. You can hear me clearly and everything. All right, so we're gonna run down the line like we always do. If you're new, welcome. If you're back, say what's up in the chat. Pretty much going to run down the line with our typical assets. If you guys have any requests along the way, obviously feel free to post them in the chat. If possible, kind of keep them relevant to what we're looking at. So we're going to start with the 10-year and DXY, and then we will move into, we'll do crypto next. Then we'll do our indexes, and then we'll do commodities and tech. So, if possible. But make sure that you realize this is not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research. Trade responsibly. Be smart. These are extremely volatile times, extremely uncertain times. So it's more important than ever to not take unnecessary risk and to be wise with your capital. All right, appreciate you, brother. Okay, great. Sounds good. We will get rolling then. All right, so first off, just looking at the 10-year here, as we could see, basically started to come down and retest to 21. Nothing has really changed here. As long as we're staying above this red line right here, I expect the same thing to continue happening. As long as we're above that channel support that we broke out from, I expect us to essentially just oscillate in this range right here. The high and the target being just over $2 or 2.0. 2.08, and then the low being right here at 1.46. So I essentially just expect us to oscillate inside of that range right there, but I would expect this red top of the channel to remain as support, and at some point in time I would expect essentially we consolidate long enough on top of this line. I would expect a powerful big green candle up to the top of the range, at which point in time I would expect a rejection and then like consolidation back down. But, as long as we are outside of this channel, I would expect this to act as support now. We've come down, we broke out of it, got the measured move almost right away, and then came down, found support, and then we found support slightly higher and didn't even touch it again, and then we found support again slightly higher. So now we're essentially inside of another range outside of the initial area that we broke out of. So if you just look at this basically as our new support now, I would expect us to just continue bouncing off that support. So we basically bounced the bottom on was that Thursday, and then on Friday we pushed up here and closed, slightly lower than our all-time high, but again, most importantly, or I guess like cycle high, but most importantly, we're putting in a series of higher lows, and we have a confirmed breakout of the range. So let's jump over and have a look at the dollar. Once again, contrary to what everyone else is saying, the dollar has been strengthening. Matter of fact, when we closed on Friday, the dollar closed the highest high that it has had since, what was that? November. So the dollar is stronger now than it was November last year. It has literally just been in a straight uptrend since January. The beginning of January, exactly like I said, even with all that money printing and everything going on, the dollar is strengthening compared to other currencies, primarily the euro. And I expect it to continue doing so. But now what does that mean? We're now at the top of the range again. We're above the 200 exponential and simple moving averages. So it is possible we could still get a rejection off the top of the range and come back down here. But exactly what I was saying happened when we're at the bottom of a pattern like this. When we keep touching the bottom like multiple times and then we keep touching the top multiple times, a good signal for when we're getting ready to have the breakout in that direction is we will go to like the top of the range, come back down, and then we'll bounce the midline. We'll bounce the midline and then we'll come back to the top of the range. So this to me looks very likely that we will get a breakout to the upside of this range. And now if we look at just like a modest measured move of this pattern right here, this is like, we could easily get more than this, But if we take that and say we're getting ready to break out of this, I mean, this is a massive move back up, and then that would essentially tag our target from the overall channel that we were inside of. So I think it's very realistic to think that we could be getting somewhere up here to like 94.5 to 95 very, very soon. So, and again, we could easily come back down, you know, find support once again. But we broke through very powerful moving averages, 200 exponential and simple, and now they basically have a flat slope on them. So if we stay above where we're at right now, if we stay above 92.70 long enough, I expect this 200 exponential and 200 simple, the two blue moving averages right here, to roll over and get a positive slope, at which point in time, you know, we've looked at this quite a few times. You know, most of the time, once this happens, this was the beginning of it back in May of 2018, and we were in an uptrend from May until May of 2020. So that was a 2-year uptrend. And the downtrend before that, once we were below it and got the negative slope, that was June of 2017 till May of 2018. So, you know, once again, we're looking at like basically on the daily, we're looking at essentially like 1 to like 3-year trends on this thing. So if we're getting ready just now to confirm a potential uptrend on the dollar, we're talking about 1 to 3 years of strengthening dollar. So what is that going to mean? That means probably that one of two things is happening. Either the dollar is strengthening compared to everything else because the US is doing well, or the dollar is strengthening compared to everything else, or at least the basket, because other countries are doing worse than the US. So we don't even have to be doing better. The dollar doesn't even have to be strong. It just has to be stronger than the other ones. So they could all show weakness, but the dollar is showing less weakness. The same as like a Bitcoin dominance chart works. Like Bitcoin can be in a downtrend, but it can be an uptrend on the Bitcoin dominance chart because it's showing more strength than the altcoins. So the altcoins are selling off, Bitcoin's selling off less. Bitcoin would be in an uptrend on the Bitcoin dominance chart. Or Bitcoin could be moving up and the altcoins are moving up, but not as fast. So again, Bitcoin is showing more strength in comparison to the altcoins. Therefore, you would see Bitcoin dominance in an uptrend. And that's an important thing to look at, and why those charts specifically are like extremely important to check out. So all right, great. So let's jump back over and let's actually, what do you guys want to do? You want to get started with crypto? There's a little action going on. There's usually action on Sunday nights, so I like to do crypto off the bat. All right, so I don't have to tell you guys what trade I'm in right now because you already know what happened over the weekend. Let's look at the futures chart. Okay, so what happens on the weekend according to my trading plan and how I trade the weekend action? We closed right here on futures at 54,055. All weekend we ran up. We ran up to like 55.5, so a little over $1,000 move to the upside. So naturally, what did I do? I enter a short to close the gap. Also, paying close attention to this. This was our previous attempt to lose the uptrend, at least temporarily. On the 821, we were able to save it and continue to the upside. Once again, here we were able to save it and continue to the upside. And then now here, so far we have saved it and we are continuing to the upside. So what is going to make me get bullish on this thing again? What's going to make me like think that we're going to get continuation? Well, of course, if we either take out the close, daily close high at 58,970, if we take out the parabolic SAR here in red, if we maintain above this trend long enough, it's going to look bullish. It's going to look like we're going to get continuation. But if we start to break down from this range and come back down here and show weakness and these tighten and tighten and tighten, we're already, if you look at the gap between the red and the yellow right here, the 8 and the 21, look at the gap between the red and the yellow right here, the 8 and the 21, look at the gap right here between the 8 and the 21. This is smaller. So we're closer to crossing to the downside than we have been previously on either one of these attempts. Now let's look at the peak right here on the waddah explosion, or I'm sorry, on the Fisher Transform. And by the way, if you're not using any of these indicators, they are all free. You can find the names and like specifically go look them up on TradingView, or you can just search like TJD or whatever. But they are all free. You can find them down in the description. Highly recommend you check them out. But so here on the Fisher, we have our first peak back here, massive push to the upside. Second peak right here, higher on price action, and then third peak right here, again, higher close on price action. And now if we look at the indicator oscillator, we have a massive peak here, we have a medium peak here, we have a little baby peak right here. So what is that? It's bearish divergence. That is 3 drives of bearish divergence on the daily. Typically will result in a strong pullback or retracement. So that is still what I'm expecting at this point in time. As long as we are putting in lower highs on price action right here, I would expect it and say that it's almost confirmed. And then let's look at this one. This is the Stoke Slope. What this is this, the red and the blue line are actually a combination of the 2 stochastics that you normally use, like blue and purple or whatever colors you use. The 2 of them are combined. I created this indicator just for simplicity's sake to just be able to run through a bunch of like assets and see real quickly what's going on with them. So the blue and red are combined into one, and then instead it switches colors once it turns like crosses. Once the slope is positive, you'll notice it's blue when it's positive, it's red when it's negative, and that corresponds with the crosses of those 2 lines, and then also like the actual slope of the 2 lines to the upside. So when it's blue, we're in an uptrend. When it's red, we're in a downtrend. When it's blue, we're in an uptrend. Super simple. And then you also have the RSI in white right here. This is the RSI, and then the yellow is the EMA, the moving average of the RSI. So when the yellow is below the white, when the white crosses above the yellow, we're in an uptrend. When the white crosses below the yellow, we're in a downtrend. Crosses back up, we're in an uptrend. And now you'll look once again right here, we have the RSI and the Stoke Slope at the same point right here. That's a real high. And then we have a lower high right here. We have a lower high on the RSI. Once again, we have a third lower high right here and a third lower high right there. That is triple bearish divergence. So we have triple bearish divergence on the RSI, triple bearish divergence on the stochastics, triple bearish divergence on everything. So I'm expecting us still to get a powerful sell-off to the downside, powerful move. So here we're looking at back over to spot markets. You know, same thing going on. We got the hard sell. We've had a pretty nice retracement. We got to bounce around where we would typically expect to get it. But, you know, we're below the slope line on the TJD TDMACD. It is red. We're going to the downside. We have a similar move like this. Now, this is slightly different because of weekend price action. If we look at these 3 dips that we had, the first one we actually got a confirmed cross to the downside. The second one we were able to save the cross. And the third one we basically saved it right here like perfectly, but now we've sold off straight down to it. So this is the area I would expect us to find support if we're going to move back to the upside and confirm save this cross. If we break down below this cross again, I would expect us to get continuation at least down to 50,200 or potentially down as low as like that 46,000 range. Now we have to play it by ear. We have to see what's going on here, but the previous time when we averted the cross, we got a massive move to the upside afterwards. This time when we averted the cross, we got this pathetic move to the upside. So now here, when we avert this cross, what's going to happen? Are we going to get another pathetic move and just barely take out the all-time high? Or are we going to enter back into a strong, powerful uptrend? Because this type of consolidation is typically bearish, as where like a consolidation to the downside and then another parabolic move to the upside is more bullish. So, but does that mean we have to sell off right now? No, but this is the most important time to protect your capital, because when I look at this 821 cross right here, this is what I determine the micro uptrend by. Of course, the macro uptrend is determined by price action being above the 200 exponential and 200 simple moving average, but also like having a positive slope to the upside. But the micro trend, when I de-risk from my positions, is the 8 and 21 cross to the downside. And then as we continue crossing more and more moving averages to the downside, it's going to look more and more bearish. So that's what I'm paying attention to. So there's nothing wrong with being flat in these markets right now, or being on the sidelines and waiting to see what happens. Because if we do break down, we're going to get a powerful move to the downside. It's going to sell off violently, something like this. You know, a big, powerful, thick candle like that. So we have to be careful something like that doesn't come in and just wreck your accounts. So, you know, in my opinion, it's not financial advice. You know, I prefer to like deleverage from the markets, or, you know, I still have my spot position holdings in Bitcoin, but now I have an open short position to cover me. So if price action does sell off, say we go down $5,000 or $10,000, I now make $5,000 or $10,000 but my Bitcoin is the same amount, but it's worth that same amount less. So all I'm doing is taking cash out of my Bitcoin, but my Bitcoin is worth less. So I still have the same amount of money. I didn't lose anything, but I have more cash and still the same amount of Bitcoin. The Bitcoin is just worth less. So it's just a way to cover yourself without having to worry about like a taxable event. Because if I was to say sell my Bitcoin, I would now have to pay taxes on those gains from, you know, basically like 4,000, or I accumulated again in like the 18,000, 21,000 range, or accumulated again in the 32,000 range. So essentially, like, I would have to pay taxes on whatever the gains are on that Bitcoin. So I don't want to have to pay taxes on, you know, $50,000 worth of gains per Bitcoin that I bought at $4,000. You know, so the best thing for me to do is go as long as I possibly can without selling that. And then in the meantime, you know, enter into like scalp trades to cover my positions, because then I can pay taxes on a smaller amount of gains. Because if price goes down $10,000, that I pay taxes on a $10,000 position instead of a $50,000 position. So that's the ideal situation. Is if I want to be long in these markets and continue to be long in these markets, I want to have as few taxable events as possible and pay taxes on as little as possible. And then also obviously you offset your gains by your losses. So if you enter like a short position and then price action goes against you, you know, you would say lose whatever your stop loss is, and then you can write that off against your gains. So, you know, it's all about risk management, position sizing, and you know, just avoiding unnecessary expenses in these markets, unnecessary, you know, trading fees, etc. So let's go over and take a look at let's look at Polkadot next. So Polkadot did not make it nearly as low as we were hoping for to get into a position, so I'm still on the sidelines in this. It is showing much more weakness than Bitcoin is. It is well below the 821. They have crossed to the downside, and it's basically just finding support on the 50-55. I put this trade setup in place down here with the potential entry at like $26. I think that still looks ideal for if we got a sell-off. But not much has changed. Definitely looking bearish. So then Dogecoin next. Same thing. You know, I was expecting Dogecoin to basically sell down to this 236. We almost came down to it and then found strength, but we have now crossed the 8 and 21 to the downside. We're well below it, and it looks like we're just rolling over. And, you know, this descending triangle, the top red line resistance and the bottom green line support still looks extremely powerful, and there's no meat left on the bone. I mean, the trading range, well, I shouldn't say none, but, you know, the trading range from the bottom to the top is basically a 14% range. So there's very little possibility for like trades. The risk reward is just not there for a potential break to the downside. But we did get finally for the first time bearish control zone. So is it potential now that we'll bounce this and stay in an uptrend? Yes. But we also have to look at this as a change of trend. I mean, the last time we got that green like highlight right there was way back here when Doge was at 3/100th of a penny. No, wait, is that right? 3 pennies, 3/10 of a penny. So 3 Dogecoin was a penny the last time we were in the bearish control zone. And now here we are in the bearish control zone again after a parabolic move to the upside, you know, with massive gaps in price action right here. So this to me is danger zone. This is like a change in trend potentially. But if we cross this back to the upside, start to get some strength, continue moving, for sure, you can stay bullish on this thing. But in the meantime, danger zone. I actually didn't end up taking this link trade, but you know, it would have worked out perfectly. You could have took that entry at 25 and had a nice move. You would have had 3 candles to get out at 27, 44. So it's like a nice, what's that, about 10%? Solid 10% move. You could have got an even better entry. Yeah, 8%. Could have got an even better entry off one of these wicks right here. But once again, same exact thing. It's just a descending triangle. We have the blue flatline support here at the bottom. Remember, everybody was talking about this is a flag, and I said I don't think so. This is going to be a descending triangle. People were looking at this as the support line, and then when we broke down from that, you know, what did we do? We just came down and turned it into a descending triangle. It happens all the time. It will fake out looking like a flag. Everybody gets bullish for continuation, and then it comes down, turns into a descending triangle. Potential move for the descending triangle on this down to like 15 bucks. It could get absolutely crushed. So. But again, I didn't take that trade. You could have easily took it. It could still get continuation to the upside, but this thing looks super bearish. I mean, we got the cross back here at $29 to the downside. So 821 cross, You know, we're finding support on the 89, as were some of the other ones. We're finding support on like the 50, 55. So it's definitely one of the weaker cryptos. Uniswap, same thing. We broke down from this blue parabolic trend line right here. Well, we broke down from the first one, and then we broke down from the second one. When we broke down from the second one, we were expecting to push back up and attempt retest the breakdown point and the 821 cross. Looks bearish. We're below it. The cross has been confirmed to the downside, and now we're just rolling over. It's going to look even more bearish if we come down and take out that 2650 range, as we'll be putting in basically like, you know, high, a low, a lower high, a lower low, a lower high again, and then potentially another lower low. So what's up, guys? Welcome. Good to see you over there. Good to see you back. Quick rundown on the clickbait title. What was the title? Massive move or something like that? I don't know. I think I reused an old title. Market cipher? I mean, I think it's a ripoff, man. I mean, I don't know. That's up to you, man. There's a lot of free indicators out there that work just as good or better. I know he like pushes that market cipher pretty hard, and I think he charges over $1,000 for it. I haven't seen anyone that he's gave it to that was shilling it for him ever use it successfully. I've seen him post a couple of like his trades before, but I mean, people can just show you their good trades. Like that's the like, and it's the weird thing about showing off your trades anyway is if you have, you know, a Bitcoin hodl position and then all of a sudden you open like a short and then your short goes in your favor, but really all you're doing is just hedging your spot position. It looks like you're a genius because you're up massively on your short, but really you're just flat because you have a long. And it works both ways like that. You could have a short and a long open at the same time from the same spot, and then I can just show you the position that's in profit. So I can take one exchange and I can open a leverage long. I can take another exchange and I can open a leverage short. And then whichever one is right, it's a 50-50 coin toss because the price is going to go up or down. I can just show you the position that's like crushing it. And really, I'm completely flat in the market because I have a long and a short. So I made no money. I lost no money regardless. But then once it's up like, you know, a massive amount, I can just be like, look, guys, I'm up $5 million. I'm crushing it. It's pointless. There's no proof of trade is a joke. Oh, Bitcoin price explosion. I mean, honestly, man, I'm still macro bullish on Bitcoin, but to tell you the truth, it looks like it looks like we're going down. I mean, we're trying to avoid the 821 cross on the daily. I know you missed this part, but it looks like it's getting ready to break down. He has long and short accounts and shows you that. Oh, I don't know, man. I honestly have not watched, what's his name? Crypto Face. I haven't watched any of his stuff in so long, man. My point is that like anything on the internet, people can always just show you what they want. Because you could have 5 accounts and do that. You could have 2 accounts and do that. You could have 1 account and have spot Bitcoin and a short open also. My point is just that I don't think, to me, Market Cipher is way too overcomplicated. All he did was took like 5 other indicators that you can get for free and then combined them into a single indicator. So I'm not saying he didn't put in a bunch of work, but I have not seen people get that, use it, and then, I got you. I haven't seen anybody get it and use it and be like, oh, this indicator is amazing. It's completely changed my game. I've seen the opposite. I've seen him give it to a bunch of like people that got super hyped up about it and then gives them like referral links to try to sell it, which is basically marketing, which is smart on his part. But then I've never seen any one of those people using it for an extended period of time successfully. And to tell you the truth, most of the technical analysts on YouTube or Twitter or whatever are absolutely horrible. You can tell if you watch them for a little bit that they have no idea what they're doing, or they just always are bullish or they're always bearish. It's the same as like the biggest thing I see nonstop in, you know, crypto, technical, like traditional markets, commodities, like everything, is people join one side and they're just always on that side. They're just always bullish or they're always bearish, and they always have a reason why, but it's never a technical reason. People are like, Michael Saylor's buying more Bitcoin, Tesla's buying more Bitcoin. Those are not technical reasons. Technicals are looking at a chart and using like math and science to like determine like the trend and the likelihood of success and everything. That, you know, fundamentals are good, but that's not technical analysis. And in the same way, somebody uses like market cipher and they like say, "Oh yeah, market cipher, I was right. I'm in a positive position because I did this, this, and this." But I mean, is that really paying off for you? Like, are you making thousands of dollars off of that market cipher, or could you just go and get those same indicators for free and use them? Like, I don't know. I mean, it's just my opinion, man. It's like anything. You could buy a course on something and pay a little money, and maybe it's just already put together for you and a little more convenient and it's worth it. Or you could probably find that same information with just a little bit of work. So, you know, I'm not against it or anything like that. I don't dislike Crypto Face. I don't have a problem with him or anything. I think in many ways he's a prophet because he was wearing a mask before anybody else was. So maybe he like called this whole situation. I don't know. That was a joke, by the way. I don't know who that is. Jason Casper? I have no idea. Shows the trade after the business. Yeah, and that's another big thing too, man. Is like I can enter so many trades and just like it's the same thing that K-Dub does. Crypto Zombie, after he's in a trade and he's profitable, he'll make 3 videos in between, won't say anything, and then finally price action will move in his direction and he's like, "Oh, I want to show you guys my leverage trade." And it's like, dude, why didn't you tell people when you're entering that trade? Because the dude probably enters 10 trades and gets stopped out and then finally has one successful and shows it to people. Like, I don't know, man. And it's the same as like it to a normal person who makes, you know, 50 to $100,000 a year. If I do like a video advertising for how successful I am as a trader and I like take pictures in front of my Lambo like in my mansion and like show off all my shit, you're like impressed by it because you're like, "Oh, he's rich and I want to be rich too, so I'll just do what he does." But in all reality, like most of those people get rich off of the people that they're like advertising to. So I feel like in a lot of ways that's like K-Dub, that's Crypto Zombie, is like how much money is he making off of people with like his referral links and his YouTube ads and all that stuff. Like I don't honestly for 1 second believe that he's making his money off of his trades. Now don't get me wrong, I'm sure he's profitable in crypto, but he's been in it for a long time. Like I think he's been in it since like 2017 and he's always bullish. So I'm sure like a bunch of his like alt positions and regular positions he's bought are profitable, but that's more of like an investment, like a long-term purchase of an asset that goes up in value. He's definitely not a trader. Like he acts like he's a trader, but he's not a trader, man. I remember when he did like a collab with Crown and he was basically like on his knees, like deep throating Crown because he's like, "Oh, you're so good at technical analysis, dude. Oh, ah." And now like he makes like technical analysis videos. It's like, bro, I remember when you were like blowing Crown because he was so good at TA and you're like, "I just want to be like you." And now you're like on Twitter every morning like looking at what other people are posting up or posting charts on TradingView, acting like you know what you're talking about. No, it's you just regurgitating information that you've seen other people put out, which that's cool, man. He's a top influencer. He reaches a lot of people, but it's also false advertising because he's not actually doing technical analysis. He's basically reading the news. He's a news reader. He goes on, accumulates a bunch of information from other people, does not give those people credit for their information, and then he just tells you what he found other people saying. So, you know, but people watch the news is important. But they don't act like they're the ones who like do all the work. They just accumulate all the work from other people. So, but anyway, let's move into ETH. So far, everything looks bullish. I mean, bearish. All right. So yeah, Ethereum, we have double top right here, or top, lower high. And then, you know, now we're in the middle of the range. You know, that short still looks good. You could have easily closed it out already. You could have just let it ride. I got stopped out of my short position back here at 1621. So it's not a big deal. I mean, it was in profit still, but you know, I didn't want to eat this whole push back up. But it looks like it's just getting ready to roll back over, honestly. It looks like it had a reflex rally, bounce, and then it's getting ready to sell back off. But we are starting to build up strength on the Stokes. We are starting to show a couple of histograms on the TJD, TDMACD. But there's no like divergence or anything in particular taking place here. Well, you could call this a divergence right here. Okay, you have a top on the stochastic, a top on the stochastic again, and then you have a higher high here and a lower high here. So that is technically bearish divergence. But again, I just expect us to trade inside this range. We have this red top. I don't expect it to get back above 1836, but I also don't expect it to just break below 1431. So, you know, as far as I'm concerned, there's enough meat on the bone for a trade in either direction. If it gets down to the bottom of the range, that's 24% back up to the upside. And then if it's at the top of the range and sells off, you know, that's 20%, 21% to the downside. So it's definitely still a tradable range to the up and downside, but right now you're right smack in the middle. So if it pushes back up here again, I would take a short off of the resistance. If it drops back down here to support again, I would take a long off of the support. But, you know, Ethereum, again, we've got the 821 cross to the downside, and this daily that just closed, we were back above the 8 but below the 21, and then the daily crossed back down. I'm sorry, it never crossed back to the upside, but the price action closed below the 8 again. So this looks bearish. It looks like it attempted to come back up and save the cross, and then it failed. So so far, all the alts that we have looked at look worse than Bitcoin. So Bitcoin looks weak, but overall still decent. This looks terrible. Hey, get out of my chat with that stuff. You're a trash bag loser. The who, the her. God, it's so crazy how many people are like trying to shill their scams, man. I must literally delete. For every one comment I get on a video, I probably delete or block 10 scammers. It's absolutely ridiculous. And my channel's like not even big, so. Basic attention token. Okay, so here's one that actually looks strong in comparison to everything else, okay? We averted the cross right here. We averted the cross right here. And now we've averted the cross right here. We're pushing up and we're still above the 8 moving average. This is probably... No, this is the most bullish one that we've looked at so far of the alts. So again, I'm still bullish on basic attention token. And again, not to like be a shill, but you know, if you're not using Brave browser, I highly recommend it. It's great. It's a great browser overall. Blocks all the ads on YouTube. You don't have to watch any of that junk. I definitely recommend it. Yeah, all right. So that, although it is showing weakness right now, it's starting off with like a bearish engulfing candle. So it's obviously not great. Looking to Bybit affiliate. Yeah, man, I get so many things for like affiliate links and stuff, dude. And honestly, if I don't use something, I have no interest really in like shilling it or anything like that. And honestly, man, like I don't need the extra headache that's associated with it. And I don't need people going on and entering like massive leverage positions and getting crushed, because I'm pretty sure that's how those affiliate links work. I think you get like a percentage of whatever they trade. So honestly, man, I think most people who trade lose. So I don't really want to make money when other people that are like my like community lose. So yeah, everything looks short-term bullish right now. Overall, still looks bullish, but short-term bearish rather. But I mean, we could easily save this price action and get continuation to the upside. But we're showing weakness. But no matter what, I think we'll at least come down and close the gap. I think you missed the gap, but you know, we have this gap basically from the close. The close was at 54,060. So I'm expecting a short-term like move back down to close the gap. But essentially, if you look at futures, the first time we avoided this little like cross to the downside, you see like the gap between the 8 and the 21 was like small. The second time it was larger. The first time the move was big. The second time the move was small. So this to me looks like weakness. And then we're also showing triple bearish divergence on all three peaks right here on both these indicators, and then the RSI as well. So we have stochastic triple bearish divergence. We have RSI triple bearish divergence, and then we have Fisher Transform triple bearish divergence. So, you know, I expect more of a move to the downside. Typically, a triple bearish divergence is going to end up with like a massive move. So the first time we put in bearish divergence, you get a move. You would expect the third time. So this is the first to the second. And then that was our move off of the second one, off the first show of bearish divergence. So the second one right here, or third peak of bearish divergence, you would expect to get a larger move than the second time, because essentially you're continuing to put in bearish divergence. So the more times you put in bearish divergence, the more powerful the move is going to be when it happens. So I would expect this pullback that we're currently inside of to be larger. So if this first one was 22.8%, let's just say 23%, I would expect this one has only been 17%. I would expect this one to come back down to the 50 and 55 moving average, which is going to put us at like 46, 47,000, because I would expect the pullback to be at least as bad on the triple bearish divergence as it was on the regular bearish divergence. So, but we could easily make it down here to like 39,000, 40,000. Which would be basically like our more traditional pullback of like 35 to 40%, which is what you typically get inside of these trends. And then also, you know, everybody looks at short time frames and nobody pays attention to the long-term stuff, but we're still inside of the bullish control zone, all this red right here. So we don't want to get bearish until we exit the bullish control zone, which we're still trending up inside of this. But we're starting to flatten out, and we're at the area where we typically sell off. So we want to be careful if this starts to roll back over. That's on the stochastics. But on the RSI, on the weekly, look right here. We have one peak, we have two peaks, we have three peaks, a higher, a medium, a low. And the last one we got rejected by the EMA of the RSI, and the RSI is still trending down. So once again, if you look at that, we have weekly triple bearish divergence on the RSI. So again, man, that's powerful bearish divergence right there. So if this does sell off, what I would expect to happen is the first retest of the 21 in this entire trend. And you'll notice these green dots right here on the parabolic SAR line up perfectly with the 21 moving average. So that also lines up perfectly with this peak right here at $40,000 on the weekly close. So I think it's very likely that we end up at $40,000 very soon. I think we'll go down before we go up. I think we will take out this low of $45,000 before we take out the high of $60,000. So, you know, a buy back down here at $40,000 and then a move back up to $60,000, that's a 50% move back just to back where we were at. So, you know, a long looks pretty good right there, in my opinion. Yeah, I think Bitcoin goes to 40K way before 70K. I do not think we'll take out the high before we come back down for that retrace. Now, things could easily change, but right now I'm not seeing any reason to be bullish on the short term. 80% pullback. I don't think we're even close to that yet, Jason. I think we still got a way to go, man. Honestly, I really do. I really think we got until the end of 21 for a bull run, until the end of this year for a bull run. Now, if we just continue straight up and don't get a pullback, I think that, I mean, that could be bullish or bearish, but honestly, I think we're way overdue to retest the 21. We're way overdue. We have not touched the 21 since $10,000. That was the last time we find it. And I don't know historically off the top of my head, but on the weekly, this has been what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I could just use the tool. The last time we touched the 21 was back here. So it's been 28 weeks since we touched the 21 moving average. That's a long time, man. Let me switch over to the regular Bitcoin chart and let's look at the last one, and then we'll keep going. I never mind looking at Bitcoin extra because I know that's primarily what like the trend is going to be based on, and then also like everyone's interested in Bitcoin. So like let's look at this last bull run. The one up to 20K. If you look at it here, I mean, we can look at each one of these periods, but the first time we were at the 21 here, and then we touched it again, it was 15 weeks. And then the next time we were at the 21, and then we touched it again, was 12 weeks. And then the next time we were at the 21, and then we touched it again. Actually, this time we came down to the 55. That was 15 weeks. And then the time after that, you know, I mean, you get the point. The next one was 22 weeks. The next one was 10 weeks. Next one was 16 weeks. Then 10 weeks. 9. And then finally, on the final one, we went 18 weeks. But I mean, that's 1, 2, 3, 4, 5, 6. That's 6 times in this bull run. 6 or 7 times in this bull run, depending where you're starting at. And that was a 111 weeks. So that was basically 2-year bull run. 2 years. And we touched it, that many times. So here, if we look at price action now, we've gone over 6 months without touching it, I think. Isn't that what we said? Yeah, I mean 27 weeks right now. So we're over 6 months into this one without a touch. So if we expect, 7 to 10, 12 touches in a 2-year bull run, I mean, we're way overdue. Way overdue. I think the longest one in the previous one we said was 22 weeks. So we're like 5 weeks overdue. So if we got one in the next week or two, I don't think it would be unrealistic. And I think there's a couple of spots where we were probably likely to head back down to it. Like this one, I thought we were going to head down to it. And then Elon Musk bought a ton of Bitcoin and pushed it up. So, there's enough money has come in this bull run to explain why we haven't touched it yet. But I don't think we're just going to never touch it again. Yeah, 100%. I mean, statistically speaking, Jason, every single bull run, you think it has major pullback? Yeah, every single bull run we've had before has resulted in an 80 to 90% pullback. I think the last one was 20,000 to 3,000. So that's 85% pullback. So even if we got a 75% pullback, if we make it up to $75,000 and then we pull back 75%, I mean, that's a massive pullback. Massive pullback. I mean, I know people don't want to hear stuff like that, but if it happens every single time, 100% of the time when an asset goes parabolic, especially like Bitcoin and crypto, if we make it to 75,000 and then we have let's say a modest pullback, because previously every other time we've broken through the 200 moving average. So let's say the 200 moves up, we still got a ways to go, and we have 75% pullback. That's $18,000, and that closes that gap that we left open on CME futures. So I think it's very likely that that happens eventually. So do I think we'll get a 75% or more pullback? Yeah. And the crazy thing is too is, imagine we do something nuts. Imagine we get up here to, let's say, $160,000, and then we have a 75% pullback. That's going to put us at $160,000. That's going to put us back down at $40,000. So, I mean, that's a massive move. And how much opportunity are you going to have from here to there to get into that trade to the upside, if you're waiting for a pullback or something like that? Again, I think we still have I think we probably have 7 to 9 months left in this bull market. I think we'll top out this cycle sometime in 2021. Typically what happens is we'll have the halving, and then we'll have basically a 2-year bull market after that. It doesn't start right away, but we'll have 2 years after that of upwards action. So I think that's the most likely thing to happen. And that would basically put us in topping out sometime near the end of 2021. So I think that's the most likely situation. Doesn't have to happen. Maybe this time is different, but I'm a strong believer that this time is different is a joke. It's always the same until it's different. So if it's been the same every other time, I don't see why it would be different this time. If it is different this time, then in the future, I won't say that it's always the same. But until then, I mean, if anything, more businesses involved means it's more likely to get destroyed. Because think about how many people have capitulated into it after saying that they didn't believe in Bitcoin and put massive amounts of money inside of it. And then if you're a random person, you can just believe in Santa Claus or, Bitcoin, and you can just hold it down 90%. And you don't have to answer to anybody. Maybe your wife, maybe your kids, if you lose your house or something because you went all in on Bitcoin, but you don't have to answer to somebody. If you're a fund manager, if you're in an ETF, if you have people's retirement accounts, if you have clients whose money you're managing for them, you can't take 75% drawdowns. You have to sell. You are forced to sell. You have a responsibility to your clients after a certain drawdown that you have to liquidate your positions or de-risk. So that tells me that when we do start pulling back, it's probably going to be exponential. The same way this bull run has been exponential to the upside, I would expect it to be exponential to the downside. So let's look at Riot. Riot had a nice move off that double bottom. Again, this is exactly what we were talking about, that descending triangle, and it worked out perfectly. Now, I still wouldn't look to get bullish on this thing, but it could easily have continuation to the upside. But, I mean, that was just like an absolute, like, perfect double bottom off this previous one right here. So, and again, I think that, you know, all these descending triangles showing up in all these different assets and all these different markets just tells me, I mean, a descending triangle is statistically bearish like 66% of the time, and it's a topping pattern. It's distribution taking place. And then if we break out of the descending triangle to the upside, that's your like 34%, and that's great. And then you just take an entrance off of the break, retest, and continuation, and that's fine. Alternatively, you take an entrance off the bottom of it and then not sell out when you get to the top. But I always prefer to buy support and sell resistance and trade the range until we break out of the range. So, but here we're right back in the middle, getting the hard sell signal at the middle. So this could just be another dead cat bounce. I mean, when we sold off the first time, we got a dead cat bounce and then put in a lower low, and then we got to bounce all the way back up. So when we sold off here, that could be our dead cat bounce, and then we come down, put in a lower low at like $34. But this was a nice move. This was a nice move. But I mean, it gapped down to, you know, it gapped down from $45 down to $39, which was the exact support area. So, you know, that was a pretty legit, like pretty easy 25% trade to the upside. So, but again, I would expect this to move with Bitcoin. But overall, it looks bearish again. And it looks like it's just attempted to save the 821 cross. Previously, it saved it. Now we actually have the cross to the downside, but you know, if it pushes back up right here, it could easily like revert the cross and just continue. MicroStrategy got a nice little bounce. Still looks like shit. Probably the worst of anything. Let's see how Michael Saylor's baby's doing. Down 52% currently. 52% down. Wow, that sucks. So yeah, I mean, and here's another thing too that tells me these markets are potentially topping out, at least temporarily. A lot of times, the strongest assets will go into consolidation topping patterns, and then like less powerful, less bullish overall, like less strong fundamental, like the market will basically diversify into the crap that hasn't moved yet, and then all that crap moves while this stuff sells off, and then everything gets crushed. But hey, thanks, man. Appreciate the compliments. I just keep it real, man. That's the difference between me and everybody else is, you know, if you watch my videos when the market's bullish, I'm going to look like, you know, a bulltard because I'm going to be bullish too. If you watch my videos when the market's bearish, I'm going to look bearish because, you know, I use technical analysis. I'll tell you the fundamental case of my investments or trades or whatever, but I mean, I tell it like it is. And that's why I'm not more popular, honestly, on YouTube. You know, people don't want to hear their kids called ugly every day. People don't want to hear somebody say Ethereum looks like shit and it's never going to $20,000. And if it is, I'll tell you way before it happens. They want to hear Ethereum's going to $20,000 tomorrow because Vitalik Buterin is a genius and he augmented his brain with robot parts and he's the smartest man alive and it's going to flip Bitcoin. That's what people want to hear. People want to hear like Charles Hoskinson is awesome and ladies love him and Cardano is the next Bitcoin and it's going to take over the #1 market spot. But that shit's not true, dude. It's just what cult members want to hear. It's the same as like, you know, not to like dog on churches or whatever, but depending what religion you are or whatever, like people always believe in their religion but hate everyone else's religion. Like, what are the chances with all the religions out there that the one you pick are even the right one? Or what if you're born in some third world country where they only have like one religion and it's the only one you've ever heard about and you don't have the internet? So like all those people go to hell because they believed in the wrong religion, even though they were like good people and like lived by like a moral code. I don't know, man. I don't know. Not to get all like religious or political or whatever, but the likelihood of the cult you join being the right cult is much more unlikely than just like using your brain and not joining a cult and then being successful, in my opinion. But I mean, if you want to join a cult, you know, there's a reason people like cults. Like, it feels good to be in a cult with a bunch of people who like agree with the same stuff you agree with and like tell you that you're doing stuff right and that you're in the right cult. You know, it works right up until you drink the Kool-Aid. But in the end, what's a cult really trying to do? They're trying to get all your money usually. All right, let's switch over to, let's do commodities next. So we'll take a look at silver and gold. Silver continuing to sell off, doing exactly what I said, continuing inside of this sideways consolidation channel with the bottom support being 22.50, top resistance being 30 bucks. We have quite a bit of support at the 200 moving averages here at like $24. We're bouncing currently the 200 exponential, but I think we're coming down to touch the 200 simple soon, and these things are flattening out. I think silver is probably getting overdue for a move to the upside, but you know, we're getting a hard sell at like the 32 range. This thing's still showing weakness on the daily. I think we'll probably get down here to like 24 bucks. I'll probably take a scalp off of like this $24 range on like a digital position. And then if we get continuation, I'll transfer that into physical. But it looks like we're going to come back down here to the bottom of the range. It looks like we're essentially in, you know, we have a high, we have a low, we have a push out, attempted breakout right here, you know, and then selling back off. So it looks like we basically had a failed breakout from what is amounting to be a descending triangle. So if we chop back down here again, or even if we bounce this and then we find resistance on this red trend line, it's going to look more and more like a descending triangle. So that's what I'm expecting. We failed to save that 821 cross and then capitulated, put in a lower low. So since this previous high, all we've done right here is put in lower lows. So it looks bearish. Bullish long term, but bearish short term. Excuse me. Gold still operating inside of our channel, still putting in lower highs and lower lows. We bounced that substantial trend line, the green one that we were talking about. We slightly broke above this red descending line right here, but we're still below the 21 moving average. We're still below the heart line of the channel. And then it's tough to see, but if I take this away, we are still below the 8 moving average. And now we're at the 377, slightly above it, but it looks like we're getting ready to break down from it back down to the 528. So it looks like gold's coming back down to like 1660. But we're in such a tight range on gold, like percentage-wise, it's hard to get bullish. The thing I am paying attention to here is this. We are above, the histogram is above the slope line, and the slope line is flipped over blue right here. That's the beginning of an uptrend. We got the hard buy right here out of the bearish control zone. That's the beginning of an uptrend. So the third indicator to tell me is if we cross the 821 back to the upside on the daily, I'll get bullish on this thing again. Now, it could just do what happened back here, though. You know, we got this same signature, and then we got the hard buy out of the bearish control zone. We got the cross, we got the blue slope flipped over, and then finally we got the 821 cross to the upside. And from then, you know, we got basically another, from the 821 cross, we got another like 5% move to the upside, which is good on gold. It's a few $100s, but again, that's 5% is not really like tradable when there's so many other assets that are doing amazing. But I'll start looking for, you know, a confirmed breakout of this range. But really, to get bullish on gold, I have to see that third thing happen, and then I have to see it break out of this range. I have to see it get back above the 200 exponential and 200 simple. And right now, the 200 exponential is curved back to the downside right here. We've got technically a death cross between the 55 exponential and the 50 exponential here, and then we have the death cross between the 50 simple and the 200 simple back here. A lot of times, though, the death cross will actually be the bottom of a consolidation pullback before continuation to the upside. But, you know, this 200 simple moving average is about to roll over and have a negative slope on it. And you guys know how I do it. When the 200 exponential and 200 simple have a negative slope and price action is below them, that's a bear market to me. And when price action's above them and they have a positive slope, that's a bull market. So we entered into gold into a bull market, back here in January of 2019. So we had a 2-year bull market. So it's not unrealistic to think that we're getting ready to enter into a 6-month to like 1 or 2 year bear market. I think probably not 2 years, probably 6 months to a year. So if we just entered into a bear market, technically, what does that tell you about inflation? The likelihood of actual inflation taking place while gold goes into a bear market is extremely, extremely unlikely. It's very unlikely that that's a stipulation for every time we've ever had like inflation fears or inflation taking place in the past. And we're in a deflationary environment. There's less production, there's less goods, there's less jobs, there's less velocity of money, there's less GDP worldwide. So all those things are deflationary on top of a macro deflationary environment, because technically, like, technology is deflationary. Like, it's naturally deflationary. So we're in a macro deflationary environment. We're in a deflationary trend, since basically a year ago because of everything that happened with the economy. One could argue that deflation was already taking place on the macro. So everything is deflationary. And then on top of that, you have gold going down. So that's everything tells me that there's deflation taking place right now, while everybody else says there's inflation taking place. And I get it. I get that when you buy stuff at the grocery store, it comes in smaller packages. I get that when you go buy gas now, it's more expensive. But are you looking at just the things you want to look at and not looking at other things? Yes, housing is more expensive than usual. Yes, gas is more expensive than it's been. But is it the most expensive it's ever been? No, gas is not at all-time highs right now. Lots of stuff is not at all-time highs right now. I think a lot of the actual, like, quote-unquote inflation that we're seeing place is actually due to supply chain constraints. So if there's less goods being made or being sold, or people are having trouble getting like products because factories are closed down. Like, for instance, perfect example is a bunch of like car manufacturers are closing down right now. Like plants are closing down because they can't get like semiconductor chips that they need for their cars. Or there's like limited constraints on, you can't get mining rigs right now. It's impossible to get crypto mining rigs right now because you can't get semiconductors to build the video cards to build the mining rigs. All those things are deflationary, but they like net deflationary because there's less of them being made, but the price is higher because there's a supply chain constraint. All that is the bottleneck in the supply chain. So that's not inflation. It's price inflation, but it's not actual inflation. And I think a big signal for me that would make me macro change my mind, and this is very important, a big signal for me to macro change my mind as to whether there's actual inflation taking place will be if we start to see wage inflation. If everybody starts to make more money, if wages start going up, if you start making $15 an hour, minimum wage, if everybody starts making more money and going into higher tax brackets, as we see prices going up, that will be a macro inflationary environment for me. If everybody's employed again and GDP is going through the roof, and all those things will tell me that there's inflation taking place, not just the price of a couple things that you pick out that you say are more expensive. Do I think the U.S. government is behind Bitcoin? Man, I've seen some stuff that talked about basically like the NSA having like something to do with it. There's definitely a possibility that somebody that was affiliated with the government is behind crypto. But if the actual U.S. government was behind crypto, we wouldn't have 90 or 95% of crypto mining taking place outside the United States. Because there's charts where you can see where all the crypto mining is taking place, and 90 to 95% of it is outside the United States. So I find it very hard to believe that the U.S. government created crypto or Bitcoin and then lets everybody else mine it. It doesn't make any sense. They would have been mining it the whole time and have massive, massive piles of it. ETH is tough. Bitcoin is no infinite amount. Yeah. I mean, there's an infinite amount of Ethereum. They're in the middle of trying to change over from proof of work to proof of stake. I totally agree that Vitalik is part robot, though. I think he's been augmented. He could be part alien, too. Or maybe he's both. Maybe he's like half human, 1/4 alien, 1/4 robot. All right, so let's switch over to some traditional markets and take a look, because we did have some nice moves on some of the indexes. Yeah, I mean, realistically, Jason, I think there's a high likelihood. I know people don't like talking about it or don't believe it, but I think there's a high likelihood that we end up back on a gold standard eventually. Um, this is like, if I'm not mistaken, this is the first time in history when there was ever a currency not backed by gold. So now all the currencies are not backed by gold. Like previously, people always had like physical backings by like gold or precious metals of their currencies, you know, going back to like Roman times, going back to like biblical days. So I think probably if the whole fiat system crashes, which I still don't think is likely, I think it's much more likely that we go to like a Fed coin or digital currency or whatever, um, or something. I think it's much more likely that eventually after the fiat system is done with, once it does crash, which could be 2 years or it could be 50 years, but I don't think it's going to happen soon. I think there's too much of a vested interest for the people in power to continue staying in power, and that would mean that, you know, you would keep basically like this going as long as possible. Yeah, I mean it's possible. I mean, but in all reality, it makes more sense. No, I don't think that's very likely. I think it would honestly, I think it would probably be China. I mean, if you look at like the Belt and Road Initiative, it's very likely that China is like the emerging superpower of the future. So more likely than not, I think China is basically like cap, like they're basically like capitalizing on like emerging markets and stuff like that. And I think they're potentially going to be like, you know, the new superpower of the next like 20 to 200 years. Yeah, I mean it's tough if you look at it because like technically like the dollar has collapsed multiple times within that period because it had like the collapse when it went off the gold standard. It's had like multiple collapses along the way. Um, so it hasn't gone like that whole time without a collapse. But I think realistically, we probably will go to like a digital currency in the near future. Oh, and for you guys tuning in, I see there's only one like on the video. Take a second and like the video. It definitely helps with like the YouTube algorithm. But I do appreciate all the comments and everything as well. So let's take a look at SPY and see what's going on here. S&P, powerful move back up. Did the same thing again as it did last time. Broke out of the channel, got a massive move back up to the top of the channel. Broke out of the channel again, or the wedge, I should say. Got a massive move back up. We came down to the 55 exponential. I still expect this thing to break back to the downside. We're still looking at, you know, peak, peak, peak. I think there's a possibility we come up here and put in another high again. Because we have the high right here. We have a lower high right here. We have the high right here. We have a higher high right here. So if this thing rolls back to the upside and gets another higher high, it's going to be like a third drive of bearish divergence. And if we look right here again, we have a peak, we have a lower peak, we have potential for a third lower peak. And again, that would be triple bearish divergence. So I think more likely than not, this will push back up here and we will get a higher close. So I think there's still a little bit of upside, possibly even a breakdown, breakout, rejection, and then capitulation. But I still think overall, technically, this looks bullish overall. We averted the 821 cross. We're above the moving averages. We're putting in a series of higher lows and higher highs. So overall, S&P still looks bullish, but it's putting in quite a bit of divergence. Appreciate those likes, guys. Dow Jones already did exactly what I said. Bounced up here. It already put in a higher high close. Now we got that previous rejection, like shooting star right here rejection, which is like a topping candle, but we came back up and got a higher close, higher high. We're at the parabolic SAR. So this one could already be ready to top back out and go down. But again, it still looks bullish technically. But we did leave. This almost looks like a dead cat bounce to a higher high, like a short squeeze. Um, Again, we're looking at potentially bearish divergence, but this is what I'm paying attention to. We lost the bullish control zone and got the hard sell but then we put in a higher high. So if we get back inside the bullish control zone, it'll look good. If we don't, it's going to look like this was just a huge like fake out or stop hunt. I don't know. But as of right now, man, this thing actually looks probably better than anything else. It's broken out of the top of that long-term channel, broke out, came back down, retested, found support, and now it's getting continuation. So like technically this looks strong. It looks like it's getting a confirmed breakout to the upside, but I'll tell you right now, I'm not buying indexes, not at these prices. There's no way. But technically, this is the strongest of all the indexes. Dow Jones, jonesing for some upside. Okay, so now let's compare that to the NASDAQ. IXIC, this one got the 821 cross and rejected the 821 cross back to the upside, tried to save it and failed, and then sold back off. And it's technically still putting in, if it turns back around and starts moving up right here, it would be putting in a higher low. But this thing still looks like it's going to get rejected here and come back down. So I'm expecting further downside. I'm expecting still a touch of the 200. And that's just what I was saying about when a lot of times when markets top out, the strongest, the ones that have moved the most, top out first. And then all those gains go into everything else. So everything else moves up while they kind of go sideways or consolidate downwards. And then slowly but surely, all the chairs get pulled from the musical chairs game. And then everything kind of falls. So that's what looks like happening. NASDAQ and tech was the strongest through the last like year. It's had massive upside, higher highs, percentage gains. The strongest movers have been in the tech sector. Strongest technicals and fundamentals have been in tech. And now here tech is looking the worst when everything else is looking better. And you could argue it's a reopening trade, but people aren't going to stop using tech. People aren't going to stop using Zoom. People aren't going to stop believing in Tesla. You know, I'd be real careful right here. I'm being real careful right here. Which reminds me, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research. Trade responsibly. This looks like it's getting ready to get rejected. Now, if we confirm this back to the upside and get continuation, the last cross we had to the downside was back here at 11,430. So we had a massive move since then. We crossed to, matter of fact, if you look at this one, we crossed to the downside and then crossed back to the upside and then crossed back to the downside. But we never took out the high until we crossed it back here, and then we finally took it out and got continuation. So here we crossed it to the downside, tried to cross it back to the upside like we did here, but we got rejected. So we showed weakness here when it got rejected and put in a lower high. Here we showed even more weakness because we got rejected, didn't get the cross to the upside, and then put in a lower high. So this looks even more weak than the previous time. So here it showed weakness, but then rallied off of it. Here it's showing weakness. I think it's more likely now that it gets a continuation pullback, and that 200 moving average comes in perfectly with the previous top that we broke out of. So this to me is an extremely high likelihood buying area. I think 12,000 on the NASDAQ looks really good. It also lines up perfectly with like the 0.5 and 618 and the 200 moving averages. I'm looking for at least if we get down here, we might not get down here. If we do though, I'm looking for a massive rally off of this point. We also have the hard sell cross, and then we also have a strong slope line to the downside, and we're showing no bullish divergence. There's nothing positive right now out of the NASDAQ. Everything the NASDAQ is showing is weakness, as where like the Dow Jones is showing strength. So Russell 2000, RUT is the ticker. Again, this one's looking weak. It's actually looking weaker because, and this is why I say that, even though we put in a high right here, we have a low right there, and then we took out that same low. So I don't want to see, I want to see a higher high, and then I want to see a higher low. So that's like continuation of the uptrend. Every other time we put in a high, we put in a low, we put in a higher high, we put in a higher low, we put in a higher high, we put in a higher low, higher high, higher low, even though that was like toppy looking, and then we still put in a higher high. But then this time we came out, and the first time since September of 2020, we put in a lower low. So that tells me we need to be real careful. We also got the cross for the first time since October of 2020. So now we have that cross to the downside. We're at the 8. We're getting rejected, or we're at the 50 definitely potential for this to be a rejection point. I would expect this to push up here and then leave a wick behind and then get rejected and come back down and at least touch the 89, at least 2085. But again, I think the 200 is likely going to get retested at some point in time along the way. But we'll have to see. You know, the Russell had a real powerful move all of a sudden and looked strong. But again, I think it was just all that money flowing into everything else after like massive parabolic moves. The British pound has been around 200 years. Oh, yeah, yeah, I get what you're saying. I get what you're saying. My bad. I didn't realize what you were saying. Oh, I thought you were talking about the dollar when you said that. I thought you meant the dollar when you said 200 years, like the like American Empire, USA. Yeah, I mean, we're definitely it's definitely war that keeps the United States. I mean, we have a strong military, but in all reality, the truth is, I mean, I think something like I can't remember the exact stats on it, but you only need like 20 nukes to like end the world. So there's a lot of places that have 20 nukes. So I think at this point in time, like it's in the best interest of like human civilization to not like set off nukes. So I think it's very unlikely that we would end up in a nuclear war that does not end up in like the destruction of like humanity. So, and for somebody like China, China's been around for so long. Like they're like a what I mean thousands of years old empire, as where you have like a lot of these other countries or like United States like are a couple hundred years old. So in all likelihood, like China, it makes sense for a dynasty like China to just wait us out, especially with everything that's going on over here right now. It looks like we're eating ourselves alive, like as we speak. I mean, look at the decline in everything over the last couple of years. Like, just the amount of like racial tension, like political tension, like drug usage, overdoses, homelessness. Like, the U.S. looks like shit right now. If you're China, you're just sitting back thinking like, yo, a couple more weeks and they'll kill themselves. We won't even have to deal with them anymore. Like, honestly, and I'm American. I'm all about America. I'm all about United States. I love our country. I just don't love what's happening to it right now. I think it's absolutely pathetic what we're letting go down. And I mean, I'm sure we must look like a laughing stock to the entire world. I know a lot of you guys are from like all over the world. A lot of my like subscribers and people are from, Europe. I got people from South Africa. I mean, all over the place, everywhere. And all Asia, everything. Basically, if you speak English and you like crypto or stocks, you know, you're part of my crew. And I mean, it's pathetic what the United States is doing right now. It's pathetic how we look. It looks like Sodom and Gomorrah, like straight out of the Bible. Like, I mean, it's nuts. I'm not going to get into like all the like topics that everybody's like so crazy about, but like this whole like cancel culture, big tech, like all this stuff is just absolutely ridiculous right now. Like my personal belief is live and let live. I don't care what you do. Do whatever you want to do. Do you. Be happy. I don't care if you're happy with a man, woman, whatever, as long as it's legal. You know what I'm saying? But my problem is when you make me pay for it. Like, if you want to get an abortion, it's not my position to tell someone they can't get an abortion, whatever the cause is, whether they just didn't feel like wearing a condom or, they got raped. That I get it. There's different situations where people would want to get one or whatever. I can't tell somebody else they're allowed to or not allowed to. But what I can say is I don't agree with my tax dollars paying for that. I don't agree with my tax dollars paying for a lot of things that we pay for. I don't agree with like the mass wars. I don't agree with indoctrination of people. I don't agree with a lot of the stuff that our tax dollars get spent on. And that's one of my biggest problems with like what's going on in the US right now. So, it blows my mind that they can't have like healthcare for, just regular Joe Schmo out there, but they have plenty of money to spend on like wars or blowing up countries who don't want to use the dollar or, confiscating oil or whatever. Like, I don't agree with stuff like that. But again, I don't like to get into all that crazy stuff. Yeah, public service announcement. Yeah, yeah, exactly, man. And again, it's like, it's super like people cancel culture and this, that, and the other. And it's like, honestly, I think there's a tiny percentage of people that believe in all this crazy bullshit. And then I think the rest of the people are just scared to speak up because they don't want to get like attacked on. Like, I don't have social media. I don't have Twitter. I don't have any of that crap. So I only know what other people are saying. But I honestly feel like this cancel culture is like, 1,000 people going after like the masses, and everybody's just too afraid to stand up for themselves. But it reminds me of that old saying where it's like, first they came for the Jews, but I was not a Jew, so I didn't stand up. And then they came for the women, but I was not a woman, so I didn't stand up. And then they came for da 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 da, and it just goes down the list. And then finally it goes like, and then finally when they came for me, there was no one left to stand up. And that's what it feels like. That's what feels like is going on right now. It feels like they're like one group after another is getting attacked by like this cancel culture like bullshit, and then slowly but surely they're whittling through like all these different groups, and then finally at the end there's nobody left. Like everybody's been attacked. And right now, there's a weird attack going on right now against like middle-aged white men. I feel like the United States is like against white men right now. They don't come out straight up and say it at first. But at first it was like, oh, we need to like make sure to help women. Women are struggling. All these women need help. Well, that's half the population right there. So now you have 50% of the people need help. The other 50% don't need help. And then it's like, oh, we need to help out black and brown people. So now you have like another 30% of the population that's moved over into like, we'll help these people bracket. So now you have, 70% or 60%, depending on how you look at it. So now those people get help. And then it's slowly but surely, it's like, we need to help out the Asians now, because everybody's like going after the Asian people with the racism because of the China virus or whatever. So now all those people are in the help bracket. So slowly but surely, you're like picking and choosing who needs all this extra help. And then you're moving all these people over. You're like, oh, now poor people need help. So you move them over. And then finally in the end, you just have everybody on one side of the line that's all like, quote unquote, like the diversity. And then you have like middle-aged white men on the other side. And it's like, so wait a minute. You're basically saying, you're not saying you want to help all these different people. You're just saying you want to help everybody but white people that are men that are middle-aged. So essentially you're just saying like, hey, we want to, like, we're not for all these people, we're just as much against middle-aged white men. So it's a super weird dynamic. And now they're actually coming out and saying it. Now you're seeing people get attacked, and you're seeing people hate on like white men. It's a super weird situation, man. Very crazy. I never thought it would happen. Like the weird like racial discrimination. At first it was like anti-discrimination. It was like, no, you can't discriminate against these people. You need to like show them favor. And now it's like, okay, now the truth is like we really are just discriminating against like white men. It's super crazy. I never thought it would come to this. And in my opinion, there should be no discrimination against anyone. You shouldn't be discriminated against because you're a male, a female, poor, rich, white, black, Asian. I think it's crazy. And to tell you the truth, I think that this came from Wuhan. I definitely do. I agree. Everything I've seen has told me that it did come from Wuhan. But when this was first happening and Trump was saying all this stuff, and calling it the China V and all that, I said the exact same thing. I said, this is horrible. He shouldn't be doing this. He should be calling it the Chinese communist flu or something like that. Not so that people realize their enemy is the Chinese Communist Party, not people of Asian descent, because this to me is just racism. It's the same thing that happened with the Twin Towers. When that happened, people came after, Middle Easterners, Arabs, like whatever. Everybody was against them, and it spurred up this crazy racism. And it's the same thing that happened with black people back in the day. So, now you have like Asians, Middle Eastern, Africans, like all these different groups. So it's like, you talk about not having racism, and then we usher in just another segment of racism in the same way. So to me, I think it should be a live and let live. I mean, it's absolutely crazy. So, but that's enough politics. We'll move back on to some technical analysis. Yeah, right. Yeah, I mean, it's, to tell you the truth, they're just making what we're taking steps backwards as far as racism, because there's people of all races, all colors that are hateful. There's there's a huge amount of women now that hate men because they say that the women have been oppressed. Like there's huge amount of men that resent women because, you know, you got divorced and the woman automatically gets the kids and you got to pay child support. So the truth is, when it's all said and done, the master plan is division. If you divide all the people up and they can't unite with each other, they can't fight for what actually matters. So all you do is create all this division amongst people, and then you can use that division to basically make them weak. Because the truth is, if everybody just united up together and said, hey, these governments are shit, like all over the world, like let's overthrow these governments, or let's vote out these people, or, you know, we want this, this, and this, or else we're going to vote you all out of office and, you know, take over with people that actually care about the people. Well, you know, that would be easy. We could easily unite and take over and win because we have the numbers, we have the masses. But as long as we stay divided into like these little clans or these little cults or these little groups based on like race or religion or sex or, you know, financial status, whatever, as long as we're divided, we can never be strong. Like together we're strong, but like separated, we're weak. And it's never going to change. Tell us how you really think. Yeah, right? Hey, man, you know you get it right here. So what, we finish up with the Russell 2000. Let's go back to the, let's go to energy, talk about energy a little bit, man. Yeah, I really don't even like getting into politics, but I've seen all this shit happening over like the last few years. And, you know, it was crystal clear exactly what was going to happen. So we got that bounce, exactly what we talked about. Perfect bounce off of the 377, in, white right here. Absolutely beautiful. I'm sorry, I said 377, but it's actually the 528. We bounced the 377 here and then broke through and then found support on the 528. And that was exactly what we were talking about. If we could find support on the 0.5, this is the 0.5 from the top all-time high to the bottom right here. And when we came up above the 0.5, came back down, found support. We did the same thing with the 382 here. We got rejected initially, came back above it, got back to it, and found support. That's exactly what you want to see. You want to see it break through, consolidate, come back above it, find support, and then break through the next one. It came down immediately, found support, broke through again, found support. What we need to be careful of, though, is that this isn't just a reaction rally and that we're going to get like a head and shoulders come in. Because this is like danger zone. Now, I am bullish on this thing long term, but there's definitely a possibility that this is just a reflex rally because we sold off into the bearish control zone. But the previous two times that happened, we got continuation and a new high. Continuation and a new high. So we could easily get continuation and a new high right here. But what would have me worried is essentially if it started to look like we were putting in like a topping pattern. Because here we have essentially a left shoulder neckline, a head, and then another neckline in the same exact spot. And then we could basically be putting in a right shoulder and then come back down. So what I would want to pay attention to is if we get continuation here, I wouldn't get bullish until after we've essentially come back up and like retested this head area, at which point in time I would get bullish for continuation, and I would expect our target of that $57 range to happen. But as far as I'm concerned right now, macro, I'm bullish on this thing, like fundamentally and technically. We avoided the 821 cross, but I want to see what happens here further because this looks like this could easily come back down and then get like a head and shoulders. Now, of course, this doesn't have to happen. It doesn't have to get a head and shoulders. But if you're paying attention to this thing ahead of time, you're not going to get caught in a position, assuming we're going to get continuation to the upside, and then we actually come down and retest like the 200 moving average. Because a move back down to like $40 from here is like, you know, almost, it's like 20% pullback. That's pretty massive pullback, and it gets you a much better entry back into this positionally. So that's XLE, the energy sector ETF. Overall, macro bullish though, and it still looks bullish overall. I mean, we're getting a bounce potentially off of the bearish control zone. We averted the 821 cross, and we're above both moving averages. So there's no reason to think it's not going to continue. ICLN, this is the iShares Trust Global Clean Energy. It's basically like a ETF for clean energy, which is like solar and windmills and all that green stuff. Which, you know, considering the whole situation and Biden and the infrastructure plan and clean energy and you know, all that like global warming, all that junk. You know, this is bullish fundamentally on the macro. Technically, it looks like crap though. We are bouncing the 200. We got a massive sell back off from that 821 cross right here. Attempted to get back of it, got rejected. Just like I said, we're bouncing the 200 exponential and simple right here. This is the exact area I was anticipating when we were way back in this area for a potential long. Now you could take a long out of this area here, and it has a nice, 16% to the downside, 50% to the upside, just to retest the all-time previous high right here, or potentially wait and try to get a better entry closer to like 20 bucks, or the worst case scenario, I would expect it to come down to like 16.75. But this is one of the ones that I'm going to really start. I'm going to see what happens on these next couple candles. If we start showing strength, I'd like to see it get back above the 21. I would rather take an entry above like 24 bucks than right now, or a little lower. But there's definitely some potential on this thing. All three of these trade setups and risk rewards are real nice, including the one we're at right now. And realistically, if this did sell back down to here, I wouldn't be looking to like get out of this with a stop loss. I would actually just be looking to like buy more. I'd be looking to just like ladder in. And I typically don't like to buy into like a pullback, like trying to buy like the bottom of something. But overall, I am bullish on this on the macro. We're still above the 200 exponential and simple, so there's a good possibility that this trade setup gets hit. We get continuation, and we never even make it down to these next two entries. So, but macro looks good. Micro looks bad. All right, so that's it for them. Let's go over to what do we got left? Look at some tech. All right. Old Elon. Let's see what Uncle Elon's got going on here. Not much has changed here. Again, tech looks weak. A lot of other stuff got a strong close on Friday, like we were expecting. Remember what I said last week on that Wednesday stream? I specifically said I was expecting one more powerful push to the downside and then potential like reaction rally. We got that going into the weekend. We got a strong close, but now we need to see, are we going to have like strength into Monday, or are we going to get like a turnaround Tuesday scenario where like we show strength Monday, close strong, and then Tuesday, we go to like noon, push to the upside, and then we start dumping again. Because in a lot of ways, I think that was reaction rally. Tesla looks bad. Got rejected on the 821 here. Got the cross way back here at like 835. Sold back off. Perfectly hit the 0.5 retracement and our initial target for a nice scalp move to the upside, at which point in time we got rejected at the 236, which is what we were expecting. So when we sold off from the top, we came down exactly to the 0.5. We bounced up 2 fib levels exactly to the 236. Then we came down 1 fib level perfectly to the 382. Got a reaction rally off the 382, and then essentially got just shy of a bearish engulfing candle, a hard rejection off the 821. I would expect continuation back down to touch the 200 exponential or simple moving average. In all reality, I think the real entry level is going to be like 483. I think we're going to get back down to the 618. Now, you guys know my macro on Tesla. I think we could have a huge pullback. I'm not necessarily expecting it, but I think that this is a 5-wave Elliott wave structure starting back at 35 bucks. I think we topped out from 35 at 200. I think we bottomed out at 71. And then I think we topped out at 900. And we could bottom out as low as 257. And I would still be massively bullish on Tesla. Or anywhere in between. I think realistically, though, we'll make it at least back down to... You'll see the first fib level here in green that I have was from the bottom at 30 whatever to the top at 200. We pulled back 618, just shy of the 618, 61.8% from the top right there. So then when we pull up here, we have another fib from that $70 up to the $900. So if we pull back between, this is to the 0.5, so this would be a more shallow retrace. I think we could get down between the 382 and the 0.5. So I think we could legitimately get an entry on Tesla in between 250 and 350. Now, does it have to happen? No. We could easily like bottom out where we're at right now. We could easily bottom out like, closer to like this range at 445. But I think there's a very high likelihood, as long as tech is not showing strength, which it is not right now. It's showing more weakness than basically anything, with the exception of MicroStrategy is the absolute worst stock in existence right now. Technically tech, so... but basically, this just looks like a dead cat bounce, lower high, and it's rolling over. This is what I call a waterfall. when we come back up to the edge and then we just start pouring out. We come back up to retest like a high right here, and then we just start pouring out. And you'll notice that we start off with like small candles and small selling, and it just slowly gets more and more violent along the way. So here we start off with slow selling, and then it just starts getting more and more violent along the way. So I'm expecting some big red candles in the future. It does not mean we can't get a pushback up here and attempt to cross this back to the upside again, but this looks like a rejection to me, and I would expect continuation at least down to 482, at which point in time I'll be looking to get some more Tesla. But in all reality, I'll see how it reacts off the 200 moving averages. A lot of stuff right now is now below the 200 moving averages and showing weakness. So NEO is next. NEO once again just started dying. I mean, this thing just started rolling over bad. Got some strength back to the upside, gapped back down, got some strength back to the upside, got a lower close on the daily. This is the lowest close it has had since it came in here and put up its top. Same situation. I think this thing has some massive downside potential. Now, you could identify this in two different ways. You could look at this just like Tesla as the 1, the 2, the 3, and then we're going to get a pullback. Or you could potentially look at it as, see, I don't really like this as an actual retrace from the bottom. I think it's more likely that this is what's going to happen. I think this is probably the 1, and then that was the 2, and that this is the 3. Because look, we basically came down to the 236 right here. We're bouncing the 200, but they're almost flat. This looks like, you know, when you drop a bouncing ball, the first time it bounces high, the second time it bounces less high, and then the third time it rolls off the table. So, you know, in all reality, I mean, I think NEO could get back down here to like $17, $18. Another like 50% pullback from where it's at right now. Does it have to? No. But we're seeing nothing but lower highs and lower lows on NEO right now. So, you know, we got a little reaction rally. It was a nice little push to the upside, but overall, looks like crap. Alibaba, it's still doing exactly what we said. Once again, it got a nice bounce right here. I'm still bearish on this thing overall. We're well below the 200 exponential and simple moving average. The exponential has already rolled over with a negative slope. 200 is flat, getting ready to roll over. We're finding some support on the 528. We found support on it the first time. We got a nice bounce. We're finding support on it a second time. I would expect potentially a nice bounce back up to like 250 to like 260. But I think we got a high right here. We got a low. We got a lower high. I think we're going to come back down eventually for a lower low. It could happen right now and just fall out the bottom, or it could bounce back up and put in a lower high and then take out the lower low. And in all reality, we had a high, we had a low, and then we have essentially, this is just part of the same move. We would get a lower high right here, but higher than this high. It would look bullish, and then we sell back off. Now, if we start to get some strength out of this, I mean, we could be talking about a 25% or so move to the upside, but this still looks bearish to me. This looks like a reaction rally bounce, and then we're coming down lower. So I can't get bullish on this thing currently, how it looks. Long term, though, I'm bullish on Alibaba. But technically, it does not look good right now. Zoom, same thing. Got that rejection off the heart line right here. And remember what we say when we're inside of a channel like this, which we are clearly inside of a channel. I mean, this channel is like perfect. We have 2, 3 very solid tests on the bottom. We have 1 slightly short here, 2, 3 solid tests on the top. So I would expect us to stay inside this channel until we don't continue to operate inside here. Once again, Zoom, I'm massively bullish on long term, but this thing is like basically about to enter a bear market. Same thing. The exponential 200 moving average has a negative slope and we're below it. The 200 simple moving average is getting ready to roll over. This looks bearish. It looks, until we get back above the 200 exponential and simple moving average, I cannot get bullish on this thing. It looks bearish to me. We retested that same low exactly like we did right here. We did the same thing 3 times in a row now. We put in a low, retested it, fell through it. Put in a low, retested it, moved back up higher, but put in a lower high on the macro, and then we came back down and put in a new low, retested it twice. So what is going to happen? Probably right here, we're probably going to get a bounce. I would say probably up to like $373. I mean, this is potentially a tradable range. You know, we could be looking at like a nice like 20 or 30% move back to the upside, but I wouldn't expect us to break out of this channel anytime soon. Matter of fact, more likely than not, being below the 200 exponential and simple moving average, I would think that after getting rejected by the heart line multiple times, I think the most likely thing that happens is we come back down to the bottom of the range. So I think it's more likely we go down to 275 than we get to 390. but it is a possibility. PayPal got a nice bounce off of that double bottom, off of that 236, same spot. We're still below the 821, still crossed to the downside, still looks weak. I think more likely than not, we're going to tag the 200 exponential and simple. 212 is still my target to the downside. You will notice that this exact area we're bouncing is the 236 on the macro. If we come back down here and bounce the 200, I would expect a powerful move back up, followed by a rejection, and come back down to the 382 for like a respectable retracement, like 186 bucks. But it could bounce this and start showing strength and move to the upside. And I wouldn't be afraid to get bullish on this thing again. But right now, it's not showing me anything. It's a little stronger than some of the other tech sector, but not that strong. Still looks weak. Still bearish. Apple still bearish. 821 cross to the downside. This one is doing what we had spoke about quite a few times now. It is dabbling around with a potential breakout. It's inside this channel, been operating inside this channel, came to the bottom of the channel, came to the top of the channel, broke out, could not maintain, came down, retested, found support, pushed up, put in a lower high again, came down, found support. So I would be potentially looking to long this thing if it starts showing more support, more strength right here. This is a decent trade setup I put in place. Again, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. 5.5% stop loss to the downside, 13.5% to the upside for a lower, higher retest of like the 786. Still would be inside of a bearish consolidation pattern, but definitely could show some strength. It already got a pullback to the 382, found support, put in a higher low, broke out potentially of this channel. Let's look if there's a way we can move this channel though that would look viable, that it didn't actually break out. Does this look more realistic? I mean, we have a high here, like multiple tests right here, multiple tests right here, multiple tests right here. We have a low here, multiple tests. We have basically a fake out breakout of the bottom, then strength out of it. I mean, there's a possibility that I don't normally like to adjust stuff, but sometimes it looks more viable, like later as price develops. And to tell you the truth, before I would get bullish on this measured move and potential strength to the upside, I would expect that this channel, like how I have it moved now, needs to get invalidated. So we are also showing quite a bit of weakness right here. We're about to get the cross on the blue and pink Stokes to the downside, so that's about to show a bearish cross. We're still well below price action. We still have a red slope on the TJD TDMACD, and honestly, it doesn't look good. It looks better than a lot of the other tech does, but it does not look good. Let's turn back on the moving averages and take a look. We're still getting rejected by the 8. So before I would get bullish on this thing, I want to see it close a daily candle above the 21. But even then, we had that happen right here, and then it just sold back off. So I'm not quite ready to get bullish on this thing, but it looks better than a lot of other tech. Obviously, new iPhone coming out too, so that's like, that's bullish at least for like this quarter, I would say. But, speaking of quarters, this is a very important time to pay attention to, because we're basically at the 1 year anniversary of like the capitulation of last year. We're also at like the quarter wrapping up as well. So we're also at like the not just the quarter chart, but the monthly chart's about to end. We have the capitulation event. That's marks the 1 year event from when a lot of people open longs. So there's a very big, typically when we see market changes, reversals, like trend changes, like powerful moves, is right around quarters. So I would expect that whatever happens at the end of this quarter, whether we start entering back into an uptrend on these assets, or we continue the downtrend, or confirm like bear markets, or at least like elongated consolidations, like time capitulation events, whatever happens for the next 3 months, statistically, often is going to be bearish. But it could be bullish, could be bearish, but whatever happens going into this rebalance trade that's about to happen, because you have people like me rebalancing their portfolios, you have people taking profits from long-term annual like 1 year positions, you have all kinds of different shifts happening. So I would expect whatever's about to happen at the end of this month is going to usher in price action for the next 3 months. So if we start showing strength on these assets and find support, I would expect like 3 more months of bullishness across the board on whatever shows strength. If we start showing weakness, I would expect 3 months of consolidations or sell-offs. which could get nasty. I mean, especially like with tech where we're already showing weakness. If we start showing like potential like another 1, 2, or 3 months of weakness, it could get real nasty in tech sector. Pinterest, and same with crypto. Almost all cryptos are below their moving averages, 8 and 21 cross to the downside, with the exception of like Bitcoin and a couple other random cryptos. Almost everything is showing weakness and looking like crap. Pinterest, same thing, below the 821, getting rejected by the 89 moving average. Next target to the downside still looks weak, $57. I'll probably take an entry off of Pinterest down here in this range. We'll see though. I'm not going to get bullish on this thing just yet. Still does not look good. Looks better than a lot of stuff, but still not good. Here's our semiconductors. We got that move. This is what I was talking about, you know, we could potentially get a powerful move back to the upside. Now the question is, now we have our high, we have our low. Are we going to just put in a lower high? So let's pull up a Fibonacci retrace and take a look at this on the short term. So from that high to our low down here, we are exactly at the 618. We came down initially, came back up to the 618, came back down to the 236, which lined up perfectly with the 89. I would expect this thing to move back up to the 786. So we could potentially just put in a lower high, or we could potentially take out the all-time high. But my next target is $248. If we come up to like 253, I expect continuation to the upside. We saved the 821 cross. We're back well above it, and we're showing strength. We got a big juicy green candle. You know, this thing looks good. Fundamentally and technically looks strong. There's obviously massive demand for semiconductors right now. This is just a semiconductor ETF. So, and I think like fundamentally and technically, I'm mad bullish on semiconductors. I think that if we're smart, if the United States is intelligent and the Biden administration has anyone left with half a brain, that we will like massively fund the production of semiconductors in the United States. It's something we use for everything. We're only going to need more of them in the future, and it's a huge bottleneck in everything. And we get all of our semiconductors, not all, but the majority of our semiconductors are coming from like Taiwan, China, like all like, you know, Asian countries, and we're relying on them for basically all the stuff that we need to make everything from like cars to spaceships to mining equipment. Like everything needs semiconductors. So if everything needs something, why wouldn't we start making it here? I mean, I think it's a great way to strengthen our supply chain. Because if all of a sudden all these countries just said, look, we're not selling you semiconductors anymore, we can't just start making them tomorrow. We can't just ramp up semiconductor production. Like it takes a bunch of infrastructure. It takes a bunch of shit to get rolling on semiconductors. So I think in all reality, that would be a really, really good idea for the United States to start manufacturing, or any country for that matter, to start manufacturing their own semiconductors. Everybody needs them, and we're only going to need more in the future. Walmart showed some strength. This is what I was talking about. It looked like we were getting ready to save that 821 cross and start moving back to the upside. Now look though, we have to be careful, because when we crossed it to the downside here, we saved it once, then lost it, saved it again, then lost it, saved it again, then capitulated down. Now here we're getting ready to cross it back to the upside. This looks like it may have bottomed out. I think there's a high likelihood that Walmart's going to see continuation to the upside. What I'm cautious about though, we are still below the 200 exponential and simple moving averages. So we could easily come back up here and have a high, you know, a low, a lower high, a lower low, a lower high, and then just sell back off and continue selling down. So I'm not ready to get bullish on this thing just yet, but it does look decent. Looks like it has some potential. Again, don't want to get overly bullish on this too soon, but you know, we could basically look at it as sort, you know, it's not pretty, but it looks a lot like a descending broadening wedge. Doesn't look great. I would rather see like another touchdown here, but that's a pretty solid like cluster of touches, and then another one right here, and then we have clearly a couple resistance points on the top, an attempted breakout followed by a massive capitulation. I mean, think about who bought into this as a breakout of the pattern right here, gets that massive bullish candle, and then opens down, immediately opens down like 6%, you know, and then from that down move, realistically, it went down 15%. So, you know, that was obviously a massive hit, especially if somebody was using leverage on this. But overall, bullish on Walmart. But right now, it looks better than most charts that we've looked at here. But I want to see it above the 200 exponential and simple. I want to see it back at the top of the range. I want to see a breakout, consolidation, retest, and then I will be ready to take a long on this thing, like long term. So I'm going to check out chat real quick, and then we'll knock through a couple more things. Yeah, definitely. There's a lot of stuff we're doing right now is making us weak as a quote unquote superpower. That's why they hate Trump. Yeah, I mean, it's a weird situation, man, because I think a lot of the people that hated Trump and voted Biden now are looking at Biden going, "What the hell was I thinking?" And in all reality, the truth is like, is that really the best we have to offer? Like, I mean, I like Tulsi Gabbard, man. I think she has a good head on her shoulders. You want to talk about like breaking the glass ceiling and having a woman president or vice president or whatever. I'd much rather have her than any of these people. You know, I'm not quite as progressive as some of these people, and honestly, like, I'm not a huge fan of the Democratic Party as a whole, but if I was going to pick any one Democrat, it would be Tulsi Gabbard. And also, like, ethnically, like, you know, being from Hawaii, I think in general, like people from Hawaii or like ethnically diverse tend to have like a little more like understanding of like both sides of the coin. So I would rather see somebody like her in office, honestly. You know, but again, is that really the best people we have to pick from, like the ones that we were putting up here? Or is it time that we like revamp the system and get like actual legitimate, like good politicians? Yeah, our forefathers were obviously geniuses. I mean, everything from, I mean, in all reality, the Constitution is like what sets us apart from most countries. And without that, I mean, imagine where we'd be right now, because it's barely saving us right now from ourselves. Appreciate all the comments, guys, interactions, a lot of positivity. Definitely appreciate it, guys. Yeah, I'm massively against racism, but it works both ways. Falling knives, I mean, scalping falling knives is good, but if you're looking for like an actual position or like trending trade or whatever, no, I'd rather wait for confirmation. I mean, if you use moving average crosses to trade off of, you're going to be way more successful than trying to catch falling knives. But I mean, I do have an indicator called the knife that works phenomenally, so obviously I don't mind it. But also, when I do these technical analysis videos too, I'm trying to help people on long-term like trending moves rather than just like little scalp trades. Because the truth is, if I make a video every day or every other day or whatever, like depending if I'm live streaming or doing a static video, it's not fair if I tell you I'm taking like a scalp trade off of like a knife stab and then I'm out of the trade and then it sells back off lower and I like didn't make a video in between and you're like, "Oh shit, I can't believe you exited that trade." That's what everybody does. They tell you after they take a long trade or after they take a short trade, but once they're like in profit or once they're out of that trade, nobody like tells you real time what their trades are going to be. Like on this channel, you go back and watch my videos from like a week ago or 2 weeks ago or 6 months ago, and you see exactly, I already have targets laid out. I have entries, I have exits, I have reasons why I like those entries and exits, what I'm expecting to happen, why I'm expecting it to happen, what's going to invalidate my expectations or validate my expectations. Like I lay it out so it can play out. So if you don't watch another video for a month, you can come back in and look at it and you're like, "Oh shit, he was right," or "Oh shit, he was wrong," and he was wrong exactly where he said he thought he was going to be wrong. You know, and that's the key, is because then you don't rely on somebody else. Because like, I don't want to create a video every day where you guys tune in to see if you should open new positions or close new positions. That's not what this is all about. This is all about helping people learn, spreading the knowledge, the wealth, sharing my indicators, sharing my like trade setups, and like, you know, how I'm like rationally like trading these markets, not just like being a fundamental bulltard or like perma bear or perma bull. Take a look at XAU BTC and how long I continue to be bearish. Yeah, on the monthly, we can definitely do that. And then a drop to 0.01 in around 7 months. I think they will let especially growth and tech bleed hard as rates go up. Yeah, I mean, if rates continue to go up, man, we're going to see a lot of pain in the market, especially the stuff that's going parabolic. Excellent observation. Commander Corn. I like that name. Yeah, I mean, I think honestly that's what the Fed wants. I think the Fed wants the market to be begging for like them to save them. And the truth is too, is like, Trump was like a pinnacle of his presidency was the strong stock market. And I don't think Biden feels the same way. I don't even think he knows what room he's in. So the truth is, like, I don't expect them to come out and try to save the stock market in the same way. Now, granted, because of lobbying and all the support and everything, I think he's not going to try to like shoot himself in the foot and like screw over all these like big money people. But at the same time, I don't think he cares about his legacy as far as like the stock market. I don't think he really cares. I think he really is trying to like, I don't know if he's just convinced himself or if he really sees himself as like blue collar Joe, but I think he's at least trying to like angle himself as being for the people, for the little guy. And I think part of that is like the socialist agenda. I think honestly that the IMF kits. I think the IMF. I think a lot of what's going on with that 500 billion. I think that is basically like the response to the devaluing of the dollar, like the U.S. dollar. In all reality, like I think that is why the dollar is showing strength right now, even though we printed, like quote unquote printed, created, whatever you want to call it, like stimulated 1.8 trillion in relation to the total money supply of US dollars compared to like that 500 billion in relation to like the euro. I think that's essentially why we're seeing strength in the dollar right now. But in all reality, as long as the US is devaluing their currency and as long as we are the global reserve currency, I would expect all other countries to do the same, either at the same rate or faster if they can. Because the truth is we import everything. So as long as, like, not everything, but I mean, I don't know what percentage, but we make almost nothing and we basically buy from everyone else. So the truth is as long as we continue to devalue the dollar, our spending power as United States citizens on imports goes through the roof. Because basically, if everybody else's currency stays the same, the way I think about it is monopoly games, okay? If there's a bunch of monopoly games going on, like the board game, all over the world, every country is its own game of monopoly. All right, and everything costs the same. A house is 100 and a hotel is 500, and all the properties are the same amount they normally are on the cards. If now the United States increases its money supply, just to be easy, if we just double our money supply and all of a sudden we have twice as much money, when we go to buy stuff inside the game, it's going to cause like micro inflation because there's more dollars fighting for the same goods. So that looks like inflation, like what's going on right now. There's only a limited amount of stuff you can buy and there's more money, so the prices go up. It's asset inflation, okay, on like the micro inside of our game of Monopoly. Now, say now we have the ability to buy stuff from other Monopoly games, but nobody else increased their money supply. So now all the players in the United States Monopoly game want to buy hotels and motels and properties or whatever from these other countries, from their Monopoly games. Well, if everybody else is still playing regular Monopoly and now we all have twice as much money, we can now afford to just buy up all of everybody else's stuff because we have twice as much money to spend. So the only way to counteract that on like the macro scale is for all the other countries, all the other Monopoly games to also increase their money supply. So now if you increase your money supply by 50% and we increased ours by 100, we still have more buying power. The United States still has more buying power to import stuff from the other Monopoly games into our Monopoly game. But we have, in relation to somebody who doesn't devalue their currency at all, we have twice the buying power in somebody that like devalues their currency by, 25%, we have a higher percent buying power, but still less buying power in comparison to somebody that doesn't devalue at all. So it's basically a race to the bottom is what they say. Like, who can devalue their currency fastest? So as long as the US is still the global reserve currency and devaluing their currency faster, we're basically forcing everyone else to do the same thing. And the only way they can stop it is by putting like, either doing it themselves or putting like massive tariffs on. And if they just put on big tariffs and then we just keep devaluing our currency, what really happens? Nothing. Because we still just have so much more money. We're like, yeah, we'll pay your tariffs, suckers. Like, it doesn't really change anything. And I think, like, honestly, that's why we're seeing so much like short-term asset inflation, is people are so scared of like this massive macro inflation because of all like the money printing and everything. But if everybody's doing it, like, it's really only short-term because we're still in a massively deflationary environment. But I mean, yeah, they've used the CVD, the big V, as like an excuse for all this stuff. But the truth is, man, before the Rona was even a thing, if you watch like some of my first videos, I was already calling for the massive capitulation event in crypto and also in like traditional markets. You can go back and watch my video from Dow Jones. It was one of the first videos I ever made when I created this channel because I seen it coming. And I didn't see it coming 5 years ahead of time or 2 years ahead of time or 1 year ahead of time. I literally called the capitulation event, the 50% dump, like within a couple months of it happening. I mean, I was watching what was going on in like the repo markets and stuff like that. And you could see what was happening with semiconductor shortages. There was a bunch of things that was telling us we were about to get a capitulation event. And the targets that I put out in my videos for the S&P, the Dow, and then also Bitcoin were literally within, the S&P and the Dow were within like 1 or 2% of the bottom was my exact targets. And then on Bitcoin, I think I said I was expecting the bottom to come in between 39 and 42,000, and I believe it went down to like 37 or 38, 30. I'm sorry, 3,900 to 4,200, like 3 to 4,000 around that range, and it went down to like 37, 38, somewhere around there. So I mean, I nailed it like almost perfectly before it happened. So, and I was like the only person talking about Bitcoin capitulating back down to like $3,000-4,000 before it happened. Nobody else was talking about it. I was also the same person that was telling everybody buy gold at $1,300, buy silver at $17. I mean, that's basically why I started this channel. Is I was like, holy shit, there's no way that I'm the smartest person alive and everybody else is mad bullish on all this stuff and it's about to get crushed. And then next thing you know, over 50% pullbacks and everything. And it was like, oh, told you so. But I mean, I think at that point in time, I had like 20 subscribers. So, oh, I'm not sure what you mean being sarcastic. I might have misunderstood what you said. I wasn't hating on you, brother. I might have just misunderstood a comment or not caught its relevancy. Convincing arguments that other countries will print harder than the US just to maintain their US holdings. Yeah, exactly, man. I mean, that's the only, like, I mean, that's really what it comes down to is it's like who's going to print faster so they don't lose their buying power. And then that's what we're going to see. Like, that's essentially what the dollar is reflecting. The dollar is reflecting the relationship of the money printing to like the euro and the rest of like the other five currencies in the basket. But it's primarily the euro. It's like over 50%, 60% the euro. So that's what we're really seeing. Yeah, I know the Monopoly reference is like almost too good at this point in time because it is like Monopoly money. Here is Zao to Bitcoin on the monthly. I mean, you can't really tell anything from this, honestly, man, because we don't have a swing. We don't have a swing high and we don't have a swing low. Like, it's only just selling off violently. So you can't even really get like a can't even really create like any kind of targets on this. Maybe if we go to like the weekly, um, we could do like a fib extension possibly. I mean, I guess realistically we could do something like this. If we take from this previous swing, I think Oh, man, is there an older chart than this? Do you know, is there an older chart than the Zao BTC Bitfinex? I would expect, honestly, it to be like the fib extension. Yeah, so here we are at this is the 2.618. Excuse me. So in all reality, let me stretch this out a little bit further. It looks like it's very close to bottoming. The 2.618 is right here. So we're at 0.031. I would expect the bottom to come in at 0.023. So that would basically say that like gold is going to continue to weaken. Bitcoin is going to continue to strengthen, but not by much. I mean, that's only another, from where we're at right now, another 24%. So, I mean, that's still a decent amount, but I mean, you could have basically like gold sell off 10% and Bitcoin go up 10%, and it would, mitigate that gap between them. Well, not quite, but just for simplicity's sake. But I mean, we're massively inside of the bearish control zone. This is like a very strong signal though. When we get that hard sell at the bottom of a trend, a lot of times that is the bottom. So we could now be getting ready to put in another hard buy, exit the bearish control zone. I mean, it looks like we're about to get this cross back. We're about to get a hard buy signal on this. So if gold strengthens at all, or Bitcoin sells off any more than it does, we're going to get a hard buy. We're still well away from exiting the bearish control zone though. But we have all green histograms. I mean, this looks like it's getting ready to flip back over, but I really can't even start getting bullish on it until it takes out the 8 moving average. Oh, about the falling knife. I got you. Yeah, yeah. I mean, really, it's more about like being responsible and not like screwing over my audience, to tell you the truth, man. But no, I do like falling knives. Like, actually, they're great for scalping. And if you've never used a knife, man, that thing is phenomenal indicator. But you got to know what you're doing. And in this situation where I just have random people tuning in, watching, I don't know who's watching my videos. Like, I don't want like a couple hundred people to just see like, oh, this knife and buy the bottom, and the next thing you know, they just get wrecked. Like, I actually care about people, like, as opposed to a lot of YouTubers who are just trying to make money off the masses. Oh, TVC? Let me switch over and look at that one. Yeah, I honestly I never look at this chart, so I just kind of like clicked on whatever was right there. Let me pull that up. Wait, are you talking about XAU to BTC? Yeah, okay, okay. Calculated by TradingView? Yeah, okay. Let me pull that up. One sec. Yeah, most of the time I just click on whatever's there, like first thing. Oh yeah, that's way better. Yeah, I was wondering why that chart was so short. I mean, this doesn't get Jesus. Yeah, I mean, that's way better, obviously, a lot more history. But we can still do the same thing though and see what. Yeah, in all reality, we're like, depending on which swing you go by, because that the last time I think that was where we went by. Maybe not. It might have just been in the middle of nowhere. Let me look at both of them. See which one looks more relevant. Because the high was the same, but the low is definitely different. Yeah, see, based on this, I would say the way I would fib this is I would fib it off of this low right here to this high right here. Not looking at this one so much. I would look at this more as like a micro inside of the overall macro. So I would not use the red one. I would use the white one. So if we go from the low back here at 0.065 up to the high here at 0.382, we're basically about at the 1.5. But essentially on the monthly, we could bounce this 1.382 and continue to the upside. But it's tough to tell at this point in time, honestly. It could go either way. If it goes back down to the 1.618, that's going to be 0.021. I think that's like the most likely target. Typically, the 1.618 is my initial Fibonacci extension target, and it almost always plays out But again, I think if we looked at the one from right here, you know, we're well past the 1.618. So, and then if you look at how it's bouncing and where it's showing like strength and weakness at, you'll notice right here, it goes all the way to the top, then it comes down and basically bounces the 786 and then comes all the way back up and bounces the 236, and then it can't get above the 382. So this is showing a decent amount of like confluence. It finds like literal like bottom support at that exact area, then resistance, then sells off. So I mean, going by this, I would say realistically 0.021, or if Bitcoin just goes parabolic, you know, and hits like whatever, couple 100,000, the 0.003 looks likely. But I mean, that would be like a 10x against gold. I don't think that's as likely, but it's still possible depending on what happens with this bull run. Because I mean, if gold's at 2,000 and if gold's at 2,000, Bitcoin's at 55,000 now, a 10x would be like gold still at like roughly 2,000. I know it's lower than that, but that would be like Bitcoin basically being at like $500,000. So it's a possibility that gold would still be around like 1,800 and Bitcoin could be at 500,000, but I really doubt that, man. I think that right now gold is potentially putting in a bottoming pattern and Bitcoin is potentially putting in a topping pattern, at least on the micro, like short term. After that, I think it's more realistic that we would get a bounce on this, come back up, a rejection off the 8 again, and then realistically we might see that continuation. But, you know, that could all happen within like 2021, like this year. But I mean, I try not to get overly bullish on stuff, man. Like, it's tough for me to sit here and say that there's a possibility that Bitcoin's going to get to 500,000. It is definitely possible, but I'm like a realist, man. I use like technicals primarily. So could it happen? Yes. But I mean, there's a lot of people out there that are not going to just... People like me are going to continue diversifying out of cryptocurrency into hard assets like gold, silver, real estate, stuff like that. I don't know that I can honestly say I think Bitcoin's going to make it to $500,000 this bull run. Next bull run, maybe. $250,000, it's possible. $100,000, it's likely. Like 72 or whatever thousand, I can't remember exactly where the fib extension's at. I think is like definitely got some possibility, but I don't see us making it to $250,000 or $500,000 this bull run. I think there's already been a ton of capitulation into crypto, a ton of FOMO into crypto. And I think regulation is like literally right around the corner. I think countries are getting pissed right now because they don't want to print money to pump an asset that competes with their own currency. So let's go over to UEC now. Uranium showing some strength, man. This thing found some support on the 21, bounced the 236, and looks like it's coming back up here to try to take out this high and continue. So it might not be done yet. If we're gonna open up at $3. If we get continuation, I would expect it to go to 360. That's 20% to the upside. And again, this thing is showing strength. I'm massively bullish on uranium. And then the uranium mining ETF, that last one was a specific miner. This is like the ETF. Same thing. Got the hard sell, showing a little bit of weakness right here. Push back up to the 821. If it can close here and then get continuation to the upside, well, obviously it has closed here. If it can get above that 8 and get continuation to the upside, I think it's going to keep running. But we did get the hard sell. It's more likely than not, after that rejection, we would consolidate right here and sell back off again, which is going to tell us that, you know, the other uranium ETF UEC would probably get rejected. But I think more likely than not, we're coming back down. I think 51 to like 45 is likely, but we could easily see continuation. I wouldn't get bearish on this thing quite yet. I mean, we confirmed that bull run not too long ago, and this is like, you know, 10 years of bear market. So I would expect a long trending trade to the upside. First Majestic, silver mining, did exactly what we said. We're putting it as ascending triangle. We have a bottom right here. We have the top right here. We have a lower high here. We have the same low here. We have a lower high here. We have the same low here. We got the bounce exactly where I said. If we break out to the upside, I'll get bullish on this thing after breakout, continuation, and consolidation. But, I mean, I can't get bullish on this thing right now. It looks bearish, like short term at least. It looks like it's going. It looks like it's going to break down from this descending triangle. Will it get the measured move? The measured move is huge, so probably not. But my target of $13 still looks real good right here. Now it's at 16 bucks though. So, you know, if you get in at 16 bucks and it goes to 13, like, you're not going to lose your ass. But I don't see any reason to buy into it right now. I would rather buy into it slightly higher on a confirmed breakout consolidation than buy into it right now when it looks like it's clearly forming a descending triangle getting ready to break down. So, but I mean, everybody knows, you know, my first Majestic target of just the measured move alone is like 36 bucks. So if you buy in at 16 versus if you buy in at 13, are you going to be mad when it's at 36? No, you're going to feel like a gangster. But again, not financial advice. USAS, American Gold and Silver Corporation. This is a gold and silver mining stock. So we hit my target. We hit my target. Made it down to just above the 0.5, but on the macro 382. Looks good from here, potentially, but it did just get a hard sell. It did lose a key support level. So I'm not going to get greedy on this thing yet. It could still easily come down to the bottom of the zone at like $1.97 or even down here to like $1.60 range. So I'm not ready to get overly bullish on this quite yet, but I'm definitely paying attention for the trend reversal and possible continuation back up to the upside, at least to put in a lower high. But at this point in time, we have a high, we have a lower high, we have a low, we have a lower low, confirmed downtrend, not looking to get overly bullish. We are flipping back the 200 exponential and simple to the downside. Gold is in a confirmed downtrend. Silver is barely hanging on to its uptrend. So I would expect the miners to just do the same thing, but more powerfully. Caterpillar found that support we were looking for. Looks bullish. Got the hard sell, but found support. Got back above the 8 and 21. We got to make sure this doesn't come back up here for a lower high rejection or start to put in divergence. But overall, you guys know how I feel about infrastructure. And, you know, if you're going to build a bunch of infrastructure, a bunch of clean energy stuff, or anything, if you're going to build a bunch of parking garages, what do you need to do it? Heavy machinery. And who makes all that? Caterpillar. One of the best looking stocks in all markets. ACB, Aurora, got a slight bounce off that same level we were looking at, but we're still paying attention to our targets down here. I mean, we're consolidating above the 0.5, but overall got the 821 cross, still below. This is the weakest of all the cannabis stocks I look at. Still below the 200 exponential and simple, both angled to the downside. I'm still looking for this potential head and shoulders. We have an inverted head and shoulders with a neckline at 20 bucks, a left shoulder at $5, the head down here at 360. So I'm looking for it to come back down to like this, like between $5 and $6 range again. And I'm looking to take buys out of that area off key fib levels between the 618 and 786. And if this thing comes back up, I would expect just the head and shoulders breakout to take us back to 32 bucks. So if I can get in this thing between $5 and $6 and it moves back up to 36 bucks, I mean, I'll be real happy with that, as I'm sure anybody else will. Looking good, though, for more continuation to the downside, followed by uptrend. All the rest of the pot stocks look much, much better. Tilray is probably one of the stronger ones, if not the strongest. It is still below the 821. We are crossed to the downside, but we're finding support on the 89. Still well above the 200 exponential and simple. I would like to see this retracement come down a little lower and like touch the top of the one. This first wave came down here at like 12 bucks, but I would expect, because this thing's showing more strength, I'm going to start buying into this in the green box area right here. Anywhere between like 1633 and 1250. I do still have some of this, but I sold the majority of it back in like the high 40s. I am definitely, this is the weekly cross. This is the weekly cross on 821. That was the bearish weekly cross in January of 2019. This is the bullish weekly cross in November of 2020, and I know I'm on the daily, but if we switch over to the weekly, you'll see I drew those in. That was the 8 and 21 cross into the downside here. That was 8 and 21 cross into the upside here. So we got like a 2-year bear market, and now we're followed by the beginning of a bull market, and I expect this thing to go absolutely parabolic. If we look at my trade setups, wherever it bottoms out right here, I'm expecting a massive, massive move after that. If we get just our initial trade setup right here is a 603% to the upside with 30% risk to the downside. It's like 20-to-1 risk-reward ratio. If we get a pushback up to the all-time high at $292, that is an 1,842% move with a 30% stop loss. That's a 60-to-1 risk-reward ratio. When are you ever going to find 60-to-1 risk-reward ratio? And then finally, if we come up here to the 2.618 or the 1.236 of the macro move, which is like the potential measured move of the 5 of the 3-wave structure, we are talking about a 6,737% to the upside with a 31% stop loss. So that's a 212-to-1 risk-reward ratio. So, I'm honestly bullish on almost all commodities long term right now. This thing is clearly in a bull market on the daily and the weekly. I expect this bull market to last between 6 to 10 years, something like that, especially as they start decriminalizing and legalizing this in the United States, especially as we don't currently have publicly traded stocks, American stocks on the American Stock Exchange. We only have Canadian stocks because it's not legalized here. So, like it or not, THC or, what's the other one? I can't think of the name of it. CBD or THC. It has proven medicinal purposes for a lot of stuff. I would much rather see people using this to medicate than Vicodin and, antidepressants and shit. As long as you can still be productive and functional. But I know a lot of people who use CBD creams and stuff like that to as a supplement or replacement for hard prescription drugs. So I'm massively bullish on this space overall. But this is probably the best stock that's out there. Best potential risk and reward ratio. These trade setups literally make me salivate. The second this thing starts to even look like it's turning back around, I will be massively, massively bullish on it. But you can obviously see the trade setups. It's not financial advice, not your financial advisor. These are just my trade setups. And last but not least on the list for today, I got Lemonade. This Lemonade did what we were hoping it wouldn't do. Well, I was hoping for anybody who cares about it. This is obviously our support. We got support right here again. Came down to it, broke it, tried to retest, get back above it. It is strengthening to the downside. The 8 is getting further away from the 21. This thing's getting ready to cross the 821 daily. It's capitulation status. Breakdown from this key area. I mean, if you want to look at this as an ascending broadening wedge, so it's going up, the wedge is getting bigger, and the move that this thing could have, you can't even do it on log scale because it'll take it down to 0. It'll be negative. Because as you move it on log scale, it just gets bigger and bigger, and the percentage is not doable. So the arrow goes forever. It would be negative. So you'll owe them money. You'll lose all your money, and then you'll owe them money. So yeah, it's literally not even possible to do a descending broadening wedge pattern, but that's what it looks like it is. You got to use a Fibonacci retracement level, and we're already almost at the 618. So at that point in time, man, I mean, you could be looking at this thing could be in real trouble. Breaking down through that trend line is real bad. I mean, I don't even know. There's not even a lot of other ways you could look at this. You could look at these 2 points as support, and a potential move back down to $52. But I mean, the truth is, man, if this thing starts to go low, I would almost half expect that it's going to go lower than its IPO. I mean, its IPO was $50. So, this thing could be negative from the IPO very soon. Looks horrible. I'm going to check out chat and then see what's going on, but probably going to wrap it up relatively shortly. I think we pretty much knocked everything out there. We did all our sectors. Bitcoin looks like it got a little bit of a bounce. Still looks weak though. It's at least trying to save the 4-hour cross. You think 150K? Based on what? What makes you think it's going to go to 150K? I'm curious. Like, are there any technicals, or are you just saying, like, that's like your magic number? And I'm not hating, I'm just curious, Eddie. I mean, just because I use technicals and, like, there's still a bunch of other targets I think that would have to have and have to happen, like, relevance before, like, 150K would even be, like, a factor. If we switch to the monthly, I mean, if we do like a Fibonacci extension off of, it's going to look like crap because there's so much stuff on the chart. But if we do a Fibonacci extension from 20,000 down to 3,000 and then look at our target, that's how I get my targets. So the 1.618 is at 60, like 2 to 4,000. That's what we already hit. So that seems very likely to me. The 2.618 target, oh, I already have it on here in green. I didn't even notice. The 2.618 target right here is 393,000. So 400,000. That would also correspond with like the top of this channel. This is a chart I don't think I've ever showed you guys actually. If we take our top right here from 1,157 and then our top right here at 18,000 and we draw a trend line along that, and then you'll see here in purple, this is a time cycle analysis. So purple was the top here to top here. So then the next one is the same amount of time between this, assuming like 4-year cycle, which Bitcoin is on. And then the blue here is the bottom, and then the bottom from here. And then assuming the bottom from the same time cycle, like the 4-year cycle, that would put our top right here at like 321,000 to 400,000. That would be our top right here in December of 2021. So that's the end of the year. This year we would top out potentially around like 300 to 400,000, which also lines up with that Fibonacci extension target based on time cycles and then also based on this trend line. So I would not rule that out of the picture that we would top out somewhere around here in that zone. I'll even put a little box in there and then we can revisit it at the end of the year and see if I was right. But that's where I think, based on time cycles and based on this trend line on the top, that's where I picked the top of the market cycle at and when. Now, time analysis and technical analysis, the hardest thing to do. So then the retracement off of that, if we used that as the top and then we used the bottom right here, the bottom right here, and then kept this just going up the same way off those bottom points, which would basically be the previous cycle bottom at 143, the previous cycle bottom at 3,000, and then this is our time cycle analysis bottom from the 4-year cycle in blue right here. That would put our bottoming for the next cycle, assuming we made it up to the top right here, that would put our bottom at $56,000. So basically where we're at right now. So that's saying that even if you bought right now, that would probably be the low of our next cycle. Now again, this is time cycle analysis and it's the hardest thing to do. But based on those trend lines, based on that channel, based on time cycles of the previous levels, it's a possibility. Now, if you start looking at the previous low before that, like the $2 low, it doesn't work anymore. Because essentially what's happening is this is like a smoothing out like parabola. We basically have like this type of pattern playing out where we're slowly like getting less and less moves. So this white line here basically says that, we're going to slowly like level out. We're not just going to keep going like parabolic, like percentage wise, but we will continue going to the upside. And then if we did the same thing again for the top and just sort of look at that, like similarly, it's not going to be perfect obviously, but it's just easier to draw it. again. But if we just did like the same type of thing from the top, you know, and again, this is not like an exact science by any means. I mean, we would basically be looking at like something more similar to this, which basically says that we're not going to make it back up here like that high, or it's going to like level out. I mean, again, this is like all like hypothetical junk, but you would expect a long-term like parabolic asset to form like more of a pattern like that than just to be like inside of like a channel. But then again, if you look at like the Dow Jones, you know, this is actually like pretty viable in comparison to something like that. Let's switch back over now after I like get all the moon boys wet. If we switch back over to something like this and look at how the Dow Jones is acting, this is one of like the oldest charts that we have like record on. And if we look at the monthly Dow Jones, I mean, look at this thing. This channel goes back to 1932 and 28. So this is like this is 100 years inside of this channel right here. You know, and you could argue that we were inside the channel like this whole rest of the time before that. These are just our like confirmed touches. So we were actually in like a slightly like tighter pattern like this, and then kind of got like the breakout into the larger pattern that we're in right now. So, you know, in all reality, was this just a portion of a broader channel that we were going to operate inside? I mean, we still are inside that same channel. So 100 years inside this channel, as opposed to Bitcoin has like 12 years of price action. It's not unrealistic to think so. But I mean, we'll have to see. Again, the longer something has history, the better it is and easier it is to chart. Like Bitcoin only has 3 halving cycles and 12 years to chart. So at any point in time, like we could bust through and like stop having like the same trends that we've always been having. I mean, we could realistically, this next bear market could be so bad that we take out like the previous bear market low and do something we've never done before and like capitulate and Bitcoin dies because something better comes out. So, you know, there's definitely a possibility. It's 12 years old. I mean, when people argue Bitcoin against gold, like I argue, you know, 10,000 years versus 12 years. What's more reliable, 12 years or 10,000 years? For me, I'm going to have to go with 10,000 years or 5,000 years or 3,000 years or 1,000 years or 100 years. I mean, it's the Lindy effect. The longer something has like been in existence, the longer it will continue to be in existence. So Bitcoin's Lindy effect is 12 years, pathetic. Gold's Lindy effect is thousands of years. So Bitcoin is not a store of value. It's a speculative asset, obviously. Store of values don't go parabolic. I mean, I love crypto. I love Bitcoin, but let's be real. It's a speculative asset, and it's the most highly speculative asset in existence. Yeah, I should change the title to that. $400,000 Bitcoin. You heard it here. All right, guys, that's going to wrap it up for tonight. I appreciate everybody who came in. Nice, what'd we do, 2.5 hours? Yeah, that was a nice solid stream. Catch me. I'll do a static video during the week, like Monday or Tuesday. I might even start doing like a Tuesday morning live stream and then a Wednesday night live stream that I've been doing. So I would do like Tuesday morning at like maybe market open, like 8 or 9 a.m. for like 2 hours, and then do and that'll I think help out like the overseas, like Europe people. And then also it's nice if anybody else trades like traditional markets. It's nice to trade around that time. The first like couple hours of the stock market's the best. Like from 9 to noon is like the best times I think to watch it. And then so if we do 2 hours, let's say on like Tuesday morning, and then Wednesday night, come back for another stream and do like make that our regular time actually instead of Thursday. And then do basically like a live stream every Wednesday from 8 to 10 or 8 to 11 or something like that. And then start doing maybe like a Friday morning live stream as well. If you guys like that, it seems like the live streams have been helping. People have been enjoying them. I've been getting more subscribers than with the static videos. I understand some people don't like the long videos, but in all reality, I mean, if somebody who watches them like went through and put in timestamps, that would be dope. I don't know if anybody here is interested in that or anybody listening to this later on, but if you're going to watch all these videos anywhere and you care about it, if somebody's got the gall to throw timestamps in, that would be phenomenal, and that would really help out the channel, and I would be much appreciative and would reciprocate that in the long run for sure. So that is definitely an option for somebody who wants to get a little more involved or knows how to do that or doesn't mind doing it. And then also, I think we'll experiment this week, probably with like the Monday morning live stream. I'm sorry, Tuesday morning live stream, and that works out perfectly too because we usually see like the turnaround Tuesdays. So I kind of like that. That's like usually a pivotal day in the market. So if we did Tuesday mornings, and then also, man, how would I have to do that? I would have to do Tuesday morning from like 8 to 10 or 9 to 11 or something like that. And then do Friday morning, like same time, 8 to 10 or 9 to 11. So we could check out like pre-market. I think 9 to 11 would probably be better. But we'll see. Leave your comments if you guys got a suggestion. Appreciate all the love, man. Yeah, I just went over the times, obviously, for you there, Bubbles. So let me know how you guys feel about those times, too. I'm fairly flexible. I pretty much trade these markets like damn near 24/7. So I don't mind the streams, and especially if it works out better for like different people in different time zones, etc. I try to make them around key times when there's like volatility in the markets or key times when I'm expecting like market shifts. But at the same time, I am a full-time trader, so, you know, still got to do my trades too. I don't want to like be making videos during like my key ideal trading times, but for the most part, man, I'm positioned ahead of time, so it's not a big deal. But definitely appreciate all you guys. Make sure you remember it's not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research. Trade responsibly. Protect your capital. Protect your principal. Trade responsibly. Make sure you're looking at measurable targets to the upside. Invalidation targets as far as stop losses. You know, likelihood of success, like probability of success. Is it a 50% chance this trade's going to be correct? Is it a 75% chance? Are you looking at risk reward of 50% or, you know, like 1-to-1, 2-to-1, 3-to-1? You know, make smart trades. Don't get caught up in like the whole moon boy mentality, because I guarantee you right now that everybody that bought Tesla or everybody that owned Tesla that didn't sell at $900 is absolutely kicking themselves in the teeth right now. And probably like everybody that bought MicroStrategy and didn't sell at $1,300 is probably like looking for Michael Saylor. So protect yourselves out there. Make sure you like protect your accounts, make intelligent decisions, pay down high interest debt, take care of your family. Get out there, man. The world is not ending. It's starting to open back up. Like where I'm at, it's popping. You wouldn't even, I mean, it's not as busy as previous seasons are, but I'm in the South, in the United States, East Coast, on the beach. And, I mean, it's popping out here. You wouldn't even know that there's anything going on. I mean, a lot of restaurants gone, a lot of businesses gone, a lot of people lost their jobs, but you know, the world is coming back to life, so it's starting to breathe again. Good night, guys. Thanks for having y'all. Everybody have a good evening, and I'll catch you on the next one. God bless you too as well, brother. I appreciate that, man, very much. Yeah, hell yeah, brother. All right, guys. Have a good night, Crypto Trend Trader, and I'm out of here.